Hey, Greg. Hi, Khadija. You start off on mute. It's, I think, the setting that the
Okay.
meeting's on.
How are you?
Good, thanks.
Okay.
Just give everyone another minute. Seem to be almost all here. All right. Katie, are you on? I mean, I see your name, but are you actually here if we start? Okay, just checking. All right, good. Well, I think we're just waiting on Kevin at this point, right? 1, 2, 3, 4, 5. Oh, who else are we missing? 1, 2, 3. Oh,
Yeah,
no,
just
Kevin.
Kevin.
Okay. All right. So we'll get started. I'm sure he's on his way in. Good evening, everybody. I am Alana Gustafson, the chair of the Finance Committee, calling this meeting to order at 7:02. Need to make sure that all members on the committee are present and can participate remotely. So I will start with Khadija. You're my first on my screen.
Here?
Okay, Peter,
Yes, all set.
Katie,
Yes.
Ken,
Yep.
Jillian,
Yes.
and I will also say hello to Greg, who is our first guest this evening.
It works. Yeah, hi.
All right, there you go. Great. Also need to let you all know that this meeting is being recorded, so please take care not to screen share anything that you don't want captured in the recording, and also that all votes this evening will be taken by a roll call vote. So to get us started tonight, we do have Greg here to discuss some of the town meeting articles that we haven't gone over yet. The budget being and free cash probably being the two big ones from Greg, but and the select board. But let's just go through some of the other ones that we haven't yet discussed as a committee with Greg here, because he should be able to answer any questions that we might have. And then we'll get to the two heavy hitters. Does that sound all right? We'll warm us up a little. So the first one we haven't really looked at. This is, and most of these are the pretty standard ones. But this is Control AO, the fiscal year 2024 salary administration plan. This is one that we need to pass at every annual town meeting. There's also a great appendix that they include with this if you want more information. But the gist of it is increasing part-time employee minimum wage up to $15 an hour, which is we've been stepping that up along with the state minimum wage, and the veterans agent salary is increasing by 2%. So does anyone have any questions on AO for Greg?
All
Go ahead.
right, I'll ask. Greg, there was some there was maybe it's the appendix Alana's referring to.
Okay,
There was a lot of text with some version of this that I saw, but can
Mhm.
we're not really changing anything. I mean, the text was helpful and a good explanation, but there's no changes here really, besides minor increases.
That's right. So just like Alana said it, and in the sponsor comments, and then even that text document, I think it only highlights the change, which is the minimum wage and the veterans agent. So we're not changing personnel
Um,
policy.
Can I just ask, I think in the explanation, it said town employees, or I thought it said town employees weren't subject to Massachusetts minimum wage, but that we do pay at that level. Maybe I'm mistaken, or all right, you don't think that's true either, right?
It might be. No. I can't say.
There was a note.
I also have learned
Okay.
not to trust my assumptions about Mass General Law. So I would say unless I see it, I can't say because I don't.
Okay, fair enough, fine. That's all I had.
okay. Any other questions for Greg? I'm just looking at that explanation. I don't think I see anything about, but. All right. Then we will move on. So that was AO. I may not have these in absolute alpha order, but let's go with AN. So transfer funds from ambulance receipts reserved for lease appropriation for FY24. So I think we have talked about this before, but our ambulance runs do bring in revenue to the town. And we keep the ambulance receipts in the ambulance reserve. And this is now an appropriation to spend from that. So it's not additional revenue. It's not additional tax money, additional ask from town meeting voters. It is coming from a specific pot of money for this purpose.
Mhm. Yep.
Greg, do we have, I don't think it's in here, how much is left in that reserve after we pull this out?
I'll have to look. I don't know off the top of my head, but and we can't use this money unless it's there, right? So
Sure.
and then, but it's been budgeted so that based on our services that we provide, this is, we take in a certain amount of money. Most of it does go towards paying off these leases, but this was relatively new, only in the last couple of years, as kind of pointed out in the last couple of town meetings, all over the couple of years with the
Right.
fire truck and the ambulance. In the past, we were transferring a lot of it was considered like indirect, so it was transferring a lot towards general fund support. But we reduced that reliance over the years so that we could fund these capital projects.
So we were using some of the ambulance revenue for operating, and now we have switched over to using it for the capital of the ambulance program.
Right, but I believe, and I'm not looking at the numbers, but I believe a certain amount is still transferred for indirect, which is appropriate because there's firefighters, so we're
Right,
paying
right.
benefits, we're paying for salaries,
Sure.
fuel. I don't know.
makes
There's
sense.
a number of to run the ambulance services, right?
Any other questions or comments on AN?
Yeah, so it would both be, it would be good to have some numbers on the balances.
I'm going to look that up.
Yeah, the last couple, what's the yearly income to it? And then, how does this compare to it? And then I'm trying to think, how does it flow into the general budget? I thought there wasn't anything that was going to the general budget anymore.
Not it, no, I believe there still is. I'll confirm that, but because I'm not, I mean, my spreadsheet doesn't get to that level of detail, but I believe that there still is indirect costs. I was only pointing out that it's less and less every year in the last particular couple of years because of this shift towards paying for these capital items. But
Right.
I'll double check. So I'll get back to you.
Okay.
Any other questions, comments on AN? Okay. And then going backwards a little bit in the alphabet, we have AD. This is another, this is relatively routine, but we don't have these every year usually. I feel like there's
No.
not always ones. These ones were a little bit out of the ordinary,
Yep.
particularly the insurance one from several years ago.
Yep. I did try to fight it, and town council said we don't have a choice. Like if it's an outstanding bill, we have to pay it. Because
Okay.
I was hoping Amaya would just not. But anyways, no, they didn't back down. So we have to pay it.
And I mean, that was on them though, like it was their accounting problem, or how did that happen? Did they give you an explanation?
Yeah, they gave us the invoices well after the fact, and then when we said like, whoa, like these are quite old, then we saw it council, and council said it is a bill, like we obligated to pay it.
Okay.
Yeah. I mean, they're a massive organization, so whatever.
Yeah.
Flaws do happen, but
Right.
it is frustrating. And to your point, Alana, it is rare that we do prior year bills, but it does happen. These particular instances are not ideal, but so typically we would do maybe an end of year transfer if there was an item that we needed, or encumbrance into the next fiscal year if we knew that there was a bill that we needed to cover from the fiscal year. So these were just certainly outstanding.
Mm-hmm. Right. I mean, the last one for Drive Tech is very, first of all, small, but also pretty routine. Like it just didn't come in time. But that insurance one is certainly not ideal. But the electricity, did nobody notice we hadn't gotten an electricity bill for 10 years?
That's right. So I asked the same question. It was being sent to, but I'm trying to remember who, but it was being sent somewhere. And then Eversource, and I want to say it was sent to a nonprofit. Maybe it was sent to an address that Eversource had for whatever league was using the fields. But and then it got, Eversource finally fixed their glitch and sent it to us at Town Hall.
All right. Well, that's what 10 years worth of electricity at Crow Park looks like, I guess.
Yep.
So it took them 10 years to catch up on this?
Yep.
But that's what I mean. Like nobody noticed we hadn't been paying for electricity I guess we just paid our regular Eversource bill and just didn't notice.
A good question. No, the Eversource bills, they are itemized, so we can see the facilities that they come in. That's a good question. I don't know why we never asked. Maybe we didn't want to ask. I don't know, but yeah.
It's not past the statute of limitations. That seems like
seriously
a long time.
I guess not. Again, town council advised us that we're obligated to pay these bills.
Yeah, I mean, you probably pay more money trying to fight them, so.
Yeah. Okay, and again, so these are going to get paid through our free cash.
That's the recommendation, yes.
Okay. Any other questions, comments on this one? Okay. And let's see. Free cash. Okay, we have, I think, just one more one that's a little. Oops, sorry. So many windows. All right, so let's do this one.
Mm-hmm.
We did have Justin in, but this wasn't fully, he mentioned it. We talked about it a little bit briefly, but it hadn't been yet sent to us.
Yeah.
So just wanted to bring it up again today, now that it's been submitted.
This was one of the last ones that we tried to get Lord to kind of process before we
Mhm.
submitted it. And it just in the transition, it just wasn't. So I have a retired finance director come in on Tuesdays, so I'll try to catch him tomorrow and see if he can get this wording correct. Otherwise, I did ask town council to kind of verify, but it's relatively procedural. So we have, I don't know how much Justin explained, but we're looking to transfer from, well, as it says, from perpetual care trust to the expense. So there's kind of like 3 buckets of money. I don't know if Justin explained this, but there's the sale of lots,
Go ahead.
and then there's 2 trusts that come out of perpetual care.
Mhm.
And so, but you can't spend out of the sale of lots or one of the perpetual care trusts, but one of the perpetual care trusts is interest earning, so you can spend the interest. And so but that's not always enough to do the items that Justin is looking to do, or just cover our yearly costs. So sometimes you transfer. So in this case, it's it's $50,000. And I think Justin told me today there's over $117,000 in what he wants to transfer it from.
Okay.
Yep.
So if we
I plan
can't
on-
spend,
But-
if we can't spend from the other accounts, what are they for?
Oh, so that's a good question. You can spend for it, but this isn't a good example of sometimes how municipal finance is I don't know, just not very straightforward.
Persnickety?
Yeah, a
That's a
little
good
bit.
word.
Yeah. So and maybe this will be an example of how municipal finance laws will change and modernize, but I don't know. Anyways, that would be nice if they did. But you're right. So we sell lots, and then we also sell a service called perpetual care. So and then but it does require a deliberate, I think it's for the sake of transparency, like it requires a deliberate act, at this case town meeting, to transfer to use those funds. Again, like I think the principle is just to kind of make sure everyone knows what we're doing with their money. But so you're right, you can't spend out of those accounts, but you can spend the money. You just have to do it in a transparent way, like transferring it into
Okay. So it's just not like an operating fund that you just use throughout the year. You have to specifically pull money from it for a
Yeah.
specific use.
Yeah.
Okay, I get it. Okay.
If you want to spend it, you have to put it into that account that you can spend out of, which is the expenditure account. So yeah,
Okay.
it's like transferring.
I thought Justin, sorry.
No, go ahead.
I thought Justin had said something about one of the trusts you can only spend the interest earnings on.
That's what I'm referring to. So we want to transfer it into that account I can spend out of.
Right.
So
Okay.
there's money there's money in one of the other accounts enough that I can transfer it out of to spend that money.
But I'm sorry, where does this money go? I'm not understanding from this language where we're transferring it to. I get where it's coming from, but there's no income line in the operating budget.
There's no income line in the operating budget. So it's revenue that we generate from I don't even know if it's not going to be listed even under local receipts because we can't spend it out of local receipts like we do for other general fund operating. So it's money
So it's going to the operating budget of the DPW.
And we're asking that it goes to the operating budget for the DPW, but it's not there. So I wouldn't put it, I would not have put it into the general fund. So actually, we'll get to it for like free cash. So the select board, I know I'm kind of jumping ahead a little bit, but the select board said, to appropriate a certain amount of money from free cash towards like the school department, right? But it's not that you're not going to see that in the general fund budget or the omnibus because that hasn't happened yet. So you can't I'm not gonna, I wouldn't list that transfer before the transfer has happened at town meeting. So similarly, you're not gonna see the money already go into like this expenditure account because it hasn't been transferred yet.
That's not. Wait, the money, I don't know what you're doing with free cash, and we haven't seen changes yet. But
Okay.
in the years, there was one other year where we did something for free cash to support the operating budget. And I thought it was shown, because otherwise we're not, what we're authorizing at town meeting is the amount to be spent.
But
So
what,
if this is intended to support increased spending from the DPW operating budget, we're not, I mean, that's not going to be authorized. He can't go above that budget that we approve at town meeting.
I'll have to get
That's what I'm
verification
trying
on
to-
that. That's no, this is a good question. I understand your line of thought. So let me,
I mean,
Yeah, I
other
need to
free
get-
cash
yeah.
or specific articles essentially set up a separate funding source. So, you know, when we authorize it for the bleachers,
Yep.
then the finance director will create, you know, some fund
Yep.
separate from the general fund that's, you know, $120,000 for bleachers. I'm not clear where this money goes. And then,
no, I understand. I do understand your question. So I'm gonna have to follow up with that. Again, like I'm a little shorthanded just because I know it's not a great excuse.
Yes,
I'm
yep.
a finance director, so I'm a little, this is kind of a little out of my regular day to day. So I'll have to get back to you.
okay. Yeah, I just can't figure out where it goes and how it's going to be spent.
Yep.
But
Mhm.
it's meant to be spent on just DPW employees doing cemetery maintenance, I assume.
That's what Justin, I mean, did just, I'd have to like defer to whatever Justin explained if maybe he didn't. But
Yeah,
that's,
I don't think he
just
said
from the
much
wording
other-
of it.
Yeah, it was right.
okay.
The title of the article says perpetual care expenditure account.
But again, that's
That's a good
Justin's
point.
wording, and I'm not clear. But I guess that would be the thing. If we really are setting up a separate fund at town hall, you
Oh,
know,
no, we're
similar
not.
to like a free cash.
Oh, I'm sorry.
Okay.
So I guess I wasn't following what you're saying. The fund already exists. So we want to transfer it from an existing amount into another existing amount so we can spend the money. Justin doesn't feel like there's enough money in the thing. Jack's on his head, so I'm actually grateful for that. So like that means there's not enough to do whatever he wants to do in the expenditure account. So he wants to transfer it into that.
Okay, so I think then
All right.
it's not actually gonna hit the DPW's operating budget as a line. It's gonna stay in this perpetual care expenditure account at which Justin will spend from
Yeah.
to pay for this maintenance and things.
But he does, because in the description, he puts it as supporting annual maintenance and operational requirements. So that's where I thought the confusion lied. And I can see that, so that it looks like we are supporting.
Like you're putting it into his operating budget, I think
Like
is why.
the
why-
free
what
cash
it-
might
Yeah,
do.
yeah,
That's why
yeah.
yeah. So that's
Okay.
why
So
need
I
to
just
get-
wanted to point out that in FY 20, 50,000 was put in a separate line in revenue in order to be spent for that purpose. I'm trying to tell you what the line said. It said free cash 50,000 in the operating budget. And that was the only time we've done it in 10 years.
Okay.
So that might be what you're thinking of, Peter. I'm not sure. It's in the financial model on the last line of the revenue is 50,000 from free cash for the operating budget. I can't remember. I can go
Right.
look back at
But
emails.
I think as Jack points out, this is different, that
Yeah.
there is some perpetual care expenditure account. So thank you, I missed that, but
Mhm.
I'm trying to find some reference to that account. But yeah,
Mm.
Any other thoughts, questions from the committee on this one? Okay, so it sounds like, Greg, we're still sort of waiting for a final
Yeah.
look over for the wording and we'll get, okay,
Because the select board actually hasn't accepted this article, so it's on their list. So I need to get it cleaned up tomorrow so that the board
Okay.
can approve it tomorrow night.
okay. Sounds good. All right. Moving on. Greg, do you have a, or I guess, or members of the committee, do you have a preference for free cash first or budget article first? Those are the two we have.
Well, let's start with the easy one, free cash.
Okay.
Just, we're not talking about revolving funds, or we did.
Oh,
talk
did I
about that,
miss?
right?
Is there another one?
I don't think there's anything to talk about, but I think, yeah, AM.
Okay, sorry. Oh, you're right. Thank you. One more procedural article and then we'll get to free cash.
That's true. There's no change from last year, so it's the same.
Right.
Yep.
Just for our new members and make sure everyone understands. So the revolving funds are funds
Yes,
that we can spend from throughout the year, but we have to say that this money's going into them so that we can do that.
a specific amount. That's right.
Yeah,
So
okay.
like the last time we added was the electrical vehicle charging stations. I don't remember if it was last year or the year before. And so there's a certain amount of money that we expect to be collected from that to pay for whatever those services are.
Okay, and these are, you said, Greg, these are at the same levels?
Yeah, I didn't adjust the numbers this year.
Okay.
Lori Plord didn't feel like we didn't feel like it was necessary to change.
Any questions on that, on how that works? Especially any newer members? Please feel free to ask questions if you're not sure what we're talking about. Sometimes a lot of definitions and words go flying.
Yeah.
Go for it.
We'll go back to the screen
Sure.
again.
Yep.
So what if the total amount doesn't get spent? What happens with that?
If it doesn't get spent,
Right.
I think I don't think it falls to free cash. I think it stays in. But let me verify that, Ruth, and I'll get back to you.
Okay.
Sorry, we're talking about the revolving accounts
Yeah.
here?
Yeah,
Mhm.
the money just stays in the revolving account, doesn't it?
Yeah,
That's what I thought, but I want to verify.
And so the money comes in from the sources. Peter, correct me if I'm wrong, money comes into these revolving funds from the different sources. So like when the planning board does their site plan review and they're charging property owners to go through the site plan, they collect fees for the site plan review that goes in. Same for inspection services, plumbing the inspections, the money comes in from the fees and it
Mhm.
stays in there. It authorizes a maximum amount for this. The money here is not being allocated from anywhere. It's just authorizing the revolving funds. Isn't that correct, Peter?
yes, correct. Well, it sets an upper limit on what you can run through the fund. So we collect $25 for a wiring inspection and pay the inspector $25. And by Mass General law, you have to set some upper limit on what it can be. And then there's the total of them can only be some X% of your budget also. But with the 400,000 is under that.
And
But
obviously
yes,
with
basically
with the inspection services, those costs are significant. So that's why those are bigger. I'm guessing the sealer of weights and measures probably doesn't have that big of fees.
Right, and the electric vehicle charging stations bring in money from when you're charging, but we also have to pay for that electricity. So that's the revolving part of it. Comes in, gets
Got
paid
it.
to do this, gets paid for that service. So it's not like we bring in money from electric vehicle charging and then pay Greg's salary or something, you know,
Mhm.
it's,
Got it. Thank you.
we all good on that one then? All right. So here we go with AL free cash. Let me make sure, because this Greg, do I have the
Yeah, that looks
correct
right.
one?
Yeah, that
Okay.
looks right.
Because it's gone through a couple iterations, so.
Yeah.
All right, and of course, there is quite a bit, because there are quite a lot of
Yeah.
different line items here, so there is quite a bit of discussion in the comments, but what would you like to start with?
Can we start with the school district operations?
Sure.
Just to start out, so my sense is that's the product of some negotiation, and does that mean there's some agreement about other articles, or is there anything to say about that, or is that not the case?
From watching the select board meeting, this was a decision that was deliberated on in their meeting and was this number brings the the school department's increase this year to 3%, I believe. And that was sort of the idea behind finding this amount, because the 3% had been a discussion point earlier in the year. I see Natasha's hand up, so go ahead, Natasha.
Yeah, I just wanted to expand on that point. The school committee had Brian and Greg had been speaking about returning the circuit breaker amount, the 257, to the school, which the school committee agreed would be an option that we would then make adjustments to our budget. The select board as a board was not in favor of that proposal. So the school committee would have been was planning to withdraw the article if there was the possibility of having the circuit breakers return. We would still have cuts. It would not be level service, but it would have not been cuts to the extent of programmatic that the larger cut would. Just that's where it stayed.
And I mean, say what you want to say, Natasha. I'm just going to ask the question anyway, you decide what you want to say. But so at this point, the school committee is still planning the other article at town meeting?
We have our hearing on Friday, and we
Okay.
are looking to explore, there could be fee increases for buses. You know, we've had some information regarding that. There was conversation of how much we would have to expand reliance on potentially school choice, which is our only other more flexible revolving account. The issue with that is it brings operating expenses into an account outside of our operating budget. And as we know from just the budget meetings, that revenue that's coming into school choice year to year is going down. So it's kind of a concern with that. How much we want to continue to rely again outside of school budget, because we also have some of these areas. So that's part of the conversation is, with the information that has been presented now and based on the select board's recent deliberation, the school committee will have to make a decision on what they want to do.
All right, thank you.
Okay, I would like to just point out that the school, the district is getting this 50,000 for the special education stabilization fund. And if you add up everything that is in this free cash article, it's $272,599.
So this is a way to have that other article, if that's revoked, this will still cover those costs that are requested in the other article.
No, these
No, the other
particular, these
article's
were,
for 500.
500, okay.
so the school items here were already part of, except for the school district operation and the school, the special education stabilization. Those were the two changes that would help offset potentially operating. The stabilization account is something that's more earmarked. But the other items had already been part of, I believe it was recommended from the CAPSCOM, outside of the level service issues and budget issues
Right.
that had been. So it would have been, if the 257 were to come back to the school, Brian had laid out some considerations where we could absorb the other areas offset. It would not be level service. Again, it would require relying more on other areas, but just to get us through FY24.
Okay, but just again, the amount that is going out in free cash is greater than the amount that was put into it with that circuit breaker amount that came from the schools this year.
Can I ask a question about what do you, I'm curious what is that leading to us for thought process? How is that just meaning that we are?
Well, because there was an idea that to give the schools back the circuit breaker money, and in this free cash article, you are getting that plus a little bit more.
No, because these are capital expenses. So these are capital
No, I
projects.
realize
I think
that.
it was, the amount was going to be put towards the operating budget, not capital expenses.
I do realize that, but the way that free cash works historically and in all other departments is free cash comes in when you don't spend part of your budget. And then we use it
I'm
on.
aware of how it works. Absolutely. Thank you.
Okay, well. We're gonna obviously have a lot more discussion about the school budget later on too with their article.
Do you want to take Mary's question because
yeah.
or do you want me to? I can
Can
explain
I
something.
just,
Sure, go ahead, Peter.
I just wanted to weigh in, Alana. I mean, the line items that are in the free cash for the school department,
Mhm.
I mean, as Natasha said, are capital line items that, the school operating budget isn't meant to cover that stuff. That, we haven't generally, we
Right.
haven't meant it to do that. So I just.
No,
it's
I'm
kinda two
just
different
pointing out
things.
that this is the way that normally free cash does work, is that if your budget, any department's budget, has unspent funds, it comes into free cash, and we don't then, if the, I don't know, if
We don't
if
use it
just
for
if
operating generally, which is
right,
true.
no, true, absolutely,
Yeah.
and if Justin didn't spend $50,000 on something and it came into free cash, we're not usually like, okay, we'll give that right back to you
Exactly.
in dollar
Yep.
for
No,
dollar.
totally
That's just
agree.
not the
I
way
get
it
that. Yep.
normally works. This is the way it,
Yep.
this is the way it usually works.
Okay.
Mary, go ahead.
Yeah, it more of what Peter just said. I mean, a month and a half ago, the 257 wasn't even in the picture, and the other items that were the capitals were there already. So if we had just received back that 257, which is operating, then we would have at least been able to make the cuts and at least get through this year. So we're left with quite a deficit to work with.
Well, that 256 wasn't from your general operating, correct? It was from special education. Circuit
Right,
breaker.
but
Right.
that is operating. I mean, it's operations.
It is, it's reimbursement for
Right.
operating expenses that we pay special education tuitions with.
And is there a reason, I'm not as familiar with this special education stabilization fund and how it works. Is there a reason you couldn't have known that 256 was coming back in time to put that into your stabilization fund?
The way that, yeah, no, it's a very valid question. And I think just the way over COVID and how trying to gauge accuracy with inflation, Wayne, the way he explained it to the school committee, he had hoped that he would be using more of that to pay for those tuitions that we talk about, which can, be maybe $1 million or whatever. So I think he was relying on or expecting to do that more. The numbers for that particular year did not come in as high. Now they are for FY24, which is kind of the rub a little bit. Now it's coming in at projecting at 14% increases versus the prior year. So it's just a matter of balancing what we normally use for the expenses out of the circuit breaker and timing it. And that's pretty much what happened.
And do you know how much is in your special education stabilization fund right now?
I think last we had sent over was about like 21, so it's not a lot. We don't usually have a lot of revenue extra to be able to push over there. So this was just another opportunity to think, okay, if the boards wanted to retain the intent of the money, that using that stabilization account was what another district we knew had done and under the same circumstances. And we thought that might be an option that either the select board or FinCom would consider.
Okay. Calvin, I see your hand. Go ahead.
Yeah. So if this is due to COVID, I imagine other districts must be going through the same process. So my question for Greg and or Natasha is, are you aware of any other districts that had a excess circuit breaker and that are returning that excess circuit breaker back to the schools via this mechanism?
Yes, Lexington. We actually, that's where we got the idea, actually, was looking at another district that had agreed to return it back to, they actually were going to return it to their stabilization account in whole.
So would you mind elaborating a little bit of what's going on, like, and what the similarities are? Is Lexington going through exactly the same thing we are, or what are the similarities between us and Lexington? What are the differences?
The only thing that I can say, just from very high level, because I'm not speaking to anybody on either board, is that they had unexpensed circuit breaker for the year that went returned back to free cash, and the school committee and their select board worked to agree, because their FY24 operating expenses were going to be so high that they were just going to return it back to them. I don't have the exact dollar amount, but it was more than ours. And they were going to return it back to their special education stabilization for the school department, which it actually requires select board and school committee approval to use out of the stabilization account. So it would be something that still requires transparency and oversight for.
So it sounds like that COVID, the circuit breaker covers like tuition. You mentioned tuition before, right?
Yes, that's one of the major.
And because of COVID, because people didn't want their kids to be in school or in person, whatnot, those expenses were low during the COVID time. But now that things are normalizing, those expenses just coming roaring back? Is that what's going on with these funds?
So I
These
guess
expenses?
I don't want to say there's just one thing. There's just I mean, COVID budgeting around COVID, I think everyone can say is rotten. But one of the things that I know, there was a lot of the special education schools were full and weren't taking placements. That was unexpected. And so the town absorbed internally, weren't paying tuitions when they were trying to place kids. So that could be one of there's just a lot of different symptomatic factors that played into why things just didn't happen as we would have, expected. Circuit breaker is a reimbursement from your prior year expenses that's calculated I think it's 120, if you spend over like 125%, I forget the exact threshold, but then you get this, back to help offset what you expense out of your operating budget. So the idea would have been that we would then be able to use this, because now we have received, again, guidance from the state that we should budget for 14% increases in tuitions for FY24.
All right. And my next question is both for Natasha and Greg. I think mostly Greg, but Natasha, if you can weigh in when it comes to the schools. Of these free cash line items, which went through the capital planning committee? It came out of the capital planning committee's recommendation.
I'll have to defer to Greg on that.
Yeah. So most of them.
So I guess let me just change it really quick.
I'll go down the list.
Which one did not come out of the capital planning committee recommendation?
I'll start at the top. Okay. Snow and ice, that's me. Capital, that's me. General stabilization, that's me. OPEB, that's me. Personal contracts, that's me. Personal property, that's me. Alumni bleachers, I think that came from capital, but maybe not. I'll take ownership of that one. It's because I think I was informing the capital planning committee of the approach to alumni bleachers planning and design, because it was like the next phase from the year before where we already did free cash towards it. Anyways, public safety active shooter training, that was me. Election poll pads, I think I got them from, that might have been from me, but I'm trying to remember if the capital planning committee weighed in on that. Prior bills, that's definitely me. Police cruiser, that's capital planning. Roads and sidewalks, it's probably a combination, because they do factor in what, like how much they would recommend. Fire department control vehicle, that's capital. Library stairwell repairs, that's capital. Public works backhoe, capital. Public works leaf vac, capital. Public works field street drainage project, capital. Public works Main Street stormwater project, capital. Public works town hall HVAC, capital. And then we already talked about these. The schools flooring, schools teacher device refresh, and then the Corey phone system. Those also were capital. So how it works is, according to the charter, the capital planning committee submits a recommended capital improvement plan to the town administrator by January 1st, December 31st, and then I can take it or leave it. And then I submit it as part of my recommended budget to the select board. But it's usually like a lot of back and forth. So like they'll say, hey, here's like the wicked long list of things that people want to buy from capital, and then they list it as best they can according to what they prioritize, according to what I tell them is a potential amount of money that they can spend, and then they list it from there. And then so I take that list, throw it into the spreadsheet that I have of free cash. And then I pop in, okay, I think I probably need this much for snow, this much for capital, general, OPEB, blah, blah, blah. And I plus whatever odds and ends come up in the meantime, like prior year bills or whatever. And then I do some magic, and I try to come up with what I think is best for the town.
So $135,000 of what's going to the school came out of the capital planning committee, which is its own independent body, which has its own kind of system. And I remember because they came in for a meeting, I believe in the fall, and I was very impressed by the system they had. And they have their own system for determining what the priorities are for capital spending, and then they go and they make the recommendation to you. Did I describe the process accurately?
And the process starts before that, because they get their capital, departments submit capital requests to the capital planning committee, and I just forward them. I mean, they submit to me, and I just forward them to the capital planning. I don't alter the requests, and I also don't withhold any, so I just forward them all to capital planning committee.
Thank you for asking my question, answering my questions.
Do they typically write a thing at the bottom like the FinCom does, like the capital planning committee recommends XYZ? Or no?
No, that's me. So I wrote,
Okay.
so please be gentle, Jillian. If those sponsor comments, that's me.
Okay, yeah, that was my question. Thanks.
But they give me their spreadsheet of their priorities. And then I also have, of course, I have the original copies of all the capital requests, so I can just read what, you know, whatever they are.
And I just wanted to add that I know that when this article was being discussed at the select board meeting, Greg, you had presented it in a sheet that also had a column, like
Mhm.
as an option, if the 257 were to go back to the school, there were certain areas that you were considering where that would come from. So I don't know if everyone had seen that, but I just remember there was different scenarios
Yep.
that informed their conversation.
Yeah, the board wanted to deliberate over options, so I presented options. But I also present, because I'm paid to do that, I presented my recommendation as well. So
And this is a silly question. All of the free cash has to be assigned somewhere at the end of the year, whether it's for a cost or for a stabilization account.
that's a good question.
No, it doesn't.
Like,
I don't think it
Uh,
does, because you can reduce your tax rate if you don't spend it. So, because then you're not required, because then you're not collecting as much. Like, we've already collected this money. So
right. So this is like the total free cash that's left.
yeah, so let's say we didn't spend $2 million. So in theory, that would be $2 million you wouldn't have to spend in you wouldn't have to collect then in FY24, because we're not writing checks back to the taxpayers. So this money
Right.
is staying in the treasury.
I
And then-
don't,
Go ahead.
I
Pete.
would defer to you, Greg, but I would have said it, that if we didn't spend the 2 million, it would just flow into free cash. Doesn't reduce the tax rate because we'd have to transfer it to the operating budget.
No, that's what I'm saying. Like I skipped a lot of steps, but you can, and I've seen towns do this. They submit a portion of their free cash specifically to reducing the tax burden for the next fiscal year. So if they maybe, I don't know,
Yeah,
whatever,
but that's-
it's usually like small amounts and it doesn't really make that much an impact to individual taxpayers, but because most towns like we are very, very reliant on free cash.
But that's essentially what we're doing with that school district operations line. I mean, we're supplementing the operating budget, and we're not going to raise taxes to cover that 88,000.
That's fair. And I also want
been
to point out that I recommended the same thing and the select board accepted for personnel contracts. And that's not our first year we've done that either. But I mean, you could also make the argument that we supplement or subsidize, or whichever terminology you want to use, for snow and ice. So yeah, the free cash there's a significant overlap with the free cash in our operating funds.
Although just for some of our newer members, snow and ice is kind of its own
Yeah.
special case. And it's one of those cases where using free cash for operating is expected,
Mhm.
honestly, and is not, that particular use of free cash for operating doesn't go against our general financial policies, which in general, using free cash for operating is not something we like to do because it is one-time use. It's not necessarily there for the operating budget for the following year. So it's not the best practice to, take free cash and use it for operating budgets.
That's true.
Yeah, Catherine, go ahead.
So question about personnel contracts. Is that also an operating expense?
As I just said, yes.
Okay.
Can I just ask, because I don't see it in the explanation, the election poll pads, is that for town meeting?
No, that's
That-
you're thinking of the clickers. This is for this is like if you go to the gym or the auditorium or the gymnasium, wherever we're doing wherever the precincts are, and then you go up, and instead of like having the paper logs, it's like, I think it's iPads, and then you just tell them your last name, your address, and then we're basically modernizing our elections, and that's what that is.
No more paper books?
There might be paper books because we're government, and I don't know if you're hearing the news, but sometimes you need to do things in duplicate.
Okay, all right, thank you.
I happen to know, so I happen to live in Acton. If for those of you who didn't know, that's where this basement's joining you from, and we use pull pads in Acton. I don't know, Madam Chair, do you want me to
Yeah.
like explain?
Um,
I don't know. I don't want to like. I just want to be available to whatever
yeah,
questions.
no, absolutely.
I'm trying to think if there's anything else I want to maybe highlight, but I think I tried to be kind of descriptive in the titles, and then again in the comments.
So,
Yeah.
so what do you plan on saying about the $58,000 for the alumni bleachers?
So for the bleachers, it's, I don't remember, I can't remember what I wrote in the comments part, but
Oh, sorry.
no, so that bleachers is actually I don't know, I hope I said something about it. I did. Okay, so whatever, you can read it, but what the $50,000 is supposed to be in addition to the request was $200,000 to the Community Preservation Committee for the use of CPA funds. They reduced that down to I can't remember what they put that to. Well, I think they said 75% of up to $200,000 of.
Yes.
Yeah.
You're correct.
Yeah.
That was a conversation we had last week with them.
Yes.
Well, that's precisely the reason why I'm asking, because personally, I did not like the way they had done that, because they were basically saying, well, when this was brought to us, it was clearly some amount that was not going to be allowable use of CPA funds. And, my response was fine. Then you sit there and you say, we'll give you up to $200,000, but it obviously has to be demonstrated that it's that the expense that we're paying for out of this is going for an allowable expense. And if it's something like the press box, which is not allowable, then one, I don't think Greg's going to bring it to you, but two, you're going to sit there and say it's not allowable, rather than the 75, because the 70, I said, what happens if they brought you $200,000, all of which was reimbursable, and you've now made it that it's only going to be 75%. So that means the maximum would be, we wouldn't even reach that maximum of 200.
Right.
And so my point is that I'm not trying to re-litigate what we said last time, but I think, part of this needs to be some acknowledgement that there is a particular reason why. I mean, frankly, I think you ought to take credit. There's a particular reason why you are putting this $50,000 forward out of free cash, so that it can be used for, for certain things that, that CPA funds can't be used. And it sort of alludes to that, but it doesn't really say that. So
That's a good point. But I mean, it's already going to be a long town meeting warrant, so I try to keep it brief. Plus, like, we're a little more, we on this call I expect a little more familiar with the CPA and the rules and the categories you can spend it in. So for the purposes of like the town meeting warrant, I just we're still getting to the same the idea is to try to get to the same point. We're trying to get designs for new bleachers.
No,
And-
and I appreciate that. Certainly, I appreciate the brevity.
Yeah.
The attempt at brevity, but we also want to be able, for things to be fully explained to town meeting voters. And I think, what they're saying is, there's some of their CPA money going to this, and now, the town administrator's trying to slip in another $50,000
Yeah.
for alumni bleachers, and yet the reality is a really good reason why you're doing this. So
Now, I did expect to put skin in the game, so to speak, from free cash. Like I did expect to ask the select board. So that was like, and that was kind of an understanding, as I understood that was important by the CPC, is to like see how much the select board is willing, instead
well,
of
I appreciate it, but the CPC doesn't own these funds. It's the town meeting voter that owns these funds. And if town meeting wants to spend $200,000 on new bleachers, then they should be allowed to do though without a lot of interference from people that are trying to micromanage the process. Personal editorial ended.
Is the $200,000 number, Greg, for that ask in CPC, is that, I mean, I assume that number wasn't just pulled from the air.
no,
that
yeah, you're
There's
right.
a
Good
reason
question.
that there's that. And then is that getting, because we already did, what was it, 179,000?
It was
Testing my,
174.
okay. Has that been spent? Or is
Okay, so-
this now getting added?
Yeah, great questions. Okay.
Okay.
Let's go in chronological. So there was $174,000 in free cash allocated to, I know that's kind of a random number. So that was not like, it wasn't 174,000 because we knew that. That just happened to have been like the remainder of the balance
What we had left, yeah.
after everything else is paid.
Do
for.
the math, yeah.
Yeah. Okay, so $174,000 was voted to bleachers, and it was a very generic article, and then it was actually made even more broad at the fall special town meeting to allow us to be able to use that funds to rent bleachers, demolish the current bleachers and rent bleachers. The whole point was to like put it towards bleachers. And so of that $174,000, we are going to start spending it down, which I think we already did, so we could demolish the visitor side. So those are gone now. And then we want to start renting bleachers. And in fact, I think the school department may have already done that. So like we're because we want to be prepared for the spring programming. So I think we already have a contract in hand. And
Yes, there was also from the fall as well, yeah.
Yeah. So the idea is to start using that money, but we want to be able to, so how you build stuff in the municipal world is, for a certain size, which this will be, is phases. So the first phase, and in fact, you're required by procurement law to do it in this way I'm about to describe. So you have to get a project manager first. And so we were hoping to keep about, and let me explain this. So Justin had kind of, Justin DeMarco, the director of public works, had sort of like, I think this is your other question, Alana, like how do we come up with $250,000? Because he had looked at other comparable sized bleachers and came up with the estimate of between $2 to $2.5 million gets you the bleachers we're talking about. So the bleachers themselves, potentially a press box, ADA compliance, right? Modern bleachers. So with that number in mind, you can start working backwards. And with that number in mind, then you see what procurement thresholds you have to hit, which does require the project manager. And so then we said, all right, if let's guess about that percentage, what percentage might be required to get a project manager of that? And we were like, all right, maybe $100,000 could get us what we need for a project manager for that size project. It's not the most complicated project because it's a bleachers, and it's not like there's not a lot of well, either way. So $100,000 or so, and maybe we don't have to spend that amount. That would be ideal, right? But we and by we I mean myself, Justin DeMarco, Brian Haas, Wayne White, and Mike Aria, the athletic director, and in consultation with some residents that are part of this like field task force that is like trying to help us out with trying to make sure that this goes the path the community wants. So of that $174,000, try to get 100 or so for project manager. That's phase one. Phase two is is the design. That's what this speaks to, as well as then that's what the application to CPC was for. And so once you have a project manager, just like we're doing in the elementary school and just like we did for the fire station, that project manager kind of holds your hand to get you designers, and then the designers the designers help you figure out exactly what it's going to look like, and then you go out to bid. And then we'll know what the cost is. But if it's $2 to $2.5 million, we don't got that. So the plan right now is to tack on so on to the fall special town meeting, where it's expected for the debt exclusion for the elementary school. That's one vote for the elementary school, and then another vote, or whatever order Dick Downey puts it in, another vote will be $2 or $2.5 million for borrowing for bleachers. Yep.
Okay.
And I don't think I said that in one sentence. So
Go ahead, Peter.
I'm sorry, I may have missed what you just said about the borrowing for bleachers.
okay.
But I've heard that discussed in some other meetings about, maybe adding it onto the school or, doing something like that. I guess my question would be, have we considered trying to do that out of the Community Preservation Fund in a similar way that we do the golf course?
Maybe you'd have to talk to them about it. So off the top of my head, I don't remember what their even I don't know what their capacity is to get that amount of money. But secondly, I don't know what their palette is like for borrowing. So like that, I think, but from my discussions, maybe Mary knows, but from my discussions with them, I don't, that was not the feeling I was getting. So Mary, maybe you can speak to it better.
I guess before I'm a little bit where Ken is, that, certainly there's a role for the Community Preservation Committee to play, and they're supposed to play that role, but it is essentially tax money, and maybe I need to explore with them why they may not be comfortable with that, but if we can pay for it that way, it seems like a good idea, and I'm less concerned about whether they have a palette for it or not. It's our money. So
Okay,
sorry.
that's okay.
Go ahead, Alana.
No, yep. Mary, you had something for that?
Yeah, just because one of the first meetings that we went to, I guess last fall, about the whole bleacher scenario, that discussion did come up. I think I brought it up actually. They're not totally opposed to it. There are 7 more years, I guess, on the golf course for that loan. So they're getting, they're over the curve. They're getting toward the end of it. But I'm like you, Peter. I'm thinking that we need to pursue that as a possible option too, because they definitely seem to have funding for borrowing. Not obviously for the full 2 million upfront, but.
Thanks, Mary. Go ahead, Kevin.
Yes. So first off, I would say that going through, in terms of the impact on the taxpayer, going through CPC funds would be financially advantageous. That would be the way to lessen the impact on the taxpayer because of the state matching. So it's not just all taxpayer money that would be going to that. It would also be some state matching funds that would go to that, and that would make it really financially advantageous. That would compete less with our general fund. The second point I have is that I can also confirm that there are concerns. The CPC themselves have concerns about the paying for the bleachers because they're still making debt payments on the golf course, but I don't see any reason why we could not recapitalize the remaining balance of the golf course and roll it into one more bond that includes the remaining balance of the golf course plus the new bleachers.
Yeah, I think the only thing there, again, that we would have to be sure can be delineated is the part of it that CPC and CPA funds can pay for and the part that can't. So
Yeah, that's true.
in that way, we could still potentially be looking to STM to borrow some, because I don't know the, and we won't know totally until we have the plans, but in terms of how much is bleacher, how much is press box, how, like those have to be sorted out, because they wouldn't, and which, for CPC is good news, because it means if it is 2.5 million, they wouldn't be on the hook for the whole amount. But it would also mean just some very careful, bookkeeping.
And,
Right.
and let me just say that I'm very sympathetic to using CPC funds for these bleachers, but the CPC, like part of the role of that committee is to ensure that the rules surrounding the Community Preservation Act are
Yep.
followed.
Absolutely.
And bleachers are somewhat of a gray area. So they are being cautious, I think, with possibly a good reason, is because we're in a legal gray area here as to whether the funds are eligible for certain parts of the bleachers. Because if you cross a certain threshold, bleachers suddenly become a stadium, and stadiums are not eligible for CPC funding. So we have to be very
Right.
careful that these are bleachers and not a stadium. And the guidance from the state is not very clear in this area.
So, and I understand that the guidance isn't clear, but the point is you sit there and you sit there and find out, you push the envelope. I'm not saying that nobody's sitting here suggesting that the CPC doesn't have a responsibility to make sure that these are being spent appropriately. But you can take a more conservative and traditional way of looking at this, or you can do what a lot of communities do and sit there and say, here's a project that we want to fund, and push it out there. And of course, they go through the approvals, they research it, et cetera, et cetera, et cetera. I would like them to sit there and say, this is taxpayer money. This is 100% taxpayer money. Not one member of the CPC has paid for this out of their pocket, other than as a fellow taxpayer. And so they ought to be guiding, they ought to be inspiring their fellow taxpayers, their fellow town meeting voters to take on ways to spend this money and lessen the amount that has to be spent out of our general fund. Again, I just, I don't understand why we're taking this traditional conservative tack when so many communities are pushing the envelope on this and being successful in doing so.
So Ken, just to be clear, part of my role is to be the messenger as a liaison.
Oh, no, he's not
so
directing it at you. Don't
I
worry,
know,
Ken.
I know. Just understand that I'm kind of informing the committee of what was
Absolutely.
discussed at the CPC meetings. I
Yep.
fully share your sentiment. We should definitely push the envelope as allowed in the gray areas. Take a beneficial aspect for where the state is unclear. Take a beneficial aspect that benefits our town. And fully agree with the sentiment, Ken. I'm just part of what I said and is reflecting what was discussed and not necessarily an endorsement of that.
No, that's absolutely. Mary, did you have something to add?
Yeah, just real quick. So one of the things, and Greg, correct me if I'm wrong, but the quotes or the designs that are going to be quoted are specifically for the bleachers, and then a separate one for like the concessions and the bathrooms, right? So that the things that the CPC can pay for versus not are going to be separated. I think that's the way that Brian explained it to us. So they're being very, very cautious about following the black and white of the CPC.
Yeah, that's a good point. So we'll probably get add alternates. So we'll do the bleachers as your base, and then you add the other things you want.
Right.
Yeah, that's a good.
Jillian, go ahead.
If the difficulty that we're encountering is because they can't support something that is a quote unquote stadium, this might be another can of worms, and maybe it won't help. It'll be like the hungry caterpillar. But why don't we just zone that area saying that it can't be a stadium?
What do you mean zone it? Sorry.
Well, I don't know if that's like a thing you can do, but like, saying that it can't be a certain capacity sports place or whatever, so then it won't meet the qualification of a stadium, and then maybe they'd feel more comfortable about it.
I don't know.
So
Interesting.
local communities can't place restrictions on educational uses.
Is the stadium an educational use?
Um, I'm guessing that,
Well,
I'm
it-
guessing that that's how the state would look at it. Obviously,
Yeah.
they can enforce other restrictions that they do of other properties, such as, I'd have to think about it. I'm not even sure you can do height and so forth. I think there are there's very limited things that local municipalities can do on educational uses.
Okay. Maybe
But-
that won't work.
I'm-
then.
Yeah, I mean, the
Interesting
other
thought,
thing is, I'm not sure it's a zoning question as much as is a state definition question.
Yeah.
Mm,
Yeah.
So-
What's the stadium and what's bleachers?
Right.
So
right.
it's kind of the definition so the definition we're looking at is like the definition between open space, which bleachers are, and structures, which is what a stadium is. And the difference from my journeyman's understanding of the Community Preservation Act, the difference is that the moment you put a roof over something, it goes from being open space to a structure. And that's the primary concern with the press box, is that it has a roof over it. So
Yeah.
now it goes from being open space to a structure because it has a roof.
That's probably true.
Wow, I'm glad I have the professional's endorsement of this.
No, I mean, that's usually the simplest way to think about it is usually the approach.
That is usually true. Okay, Jillian, you all set? Just didn't put your hand down.
Yeah, I'm just trying to figure
Okay,
out how to do
That's
that
fine.
for you.
Kevin, you all set? Okay, Natasha, go ahead.
I just wanted to mention that when the CPC, it does talk about the stadium and similar structure, it just says this prohibition has generally been interpreted to mean the CPA funds may be used only for outdoor land-based use in facilities. So it seems like their own interpretation is very loose in that they pretty much provide guidance on how they've historically interpreted that it's outdoor use items.
Mhm.
So I don't know if there's a more formalized interpretation elsewhere, but this is just from their website.
Jack, go ahead.
Excuse me, the fundamental issue is, what is the CPC definition of recreation? There's nothing to do with a bleacher being open space. It is simply, and I think Kevin or whoever said it before, the state guidance is probably missing or gray, however you want to phrase it. But the issue around, is a bleacher recreation, is a press box recreation? And I would suggest that the CPC needs to maybe be asked that question, and they may have to ask the coalition head, Stuart Saginaw, for guidance. The other alternative is what Ken was talking about. Yep, communities can push the envelope and, take whatever risk that brings up.
Right. Okay, I'm
So
sure we're gonna be yeah, 1 second, Kevin, and I'll get to you.
Sure.
I'm sure we're gonna talk more about this particular issue, and I just want to be a little conscientious of time and the
Understood.
fact we still have to talk budget with Greg. So, but if there's anything else pressing, are there any other items on this list, discussion topics about the free cash article? Okay. Then we will move on to, oh, that's AL. To the budget article. Give me 1 second here. There it is, AK. Okay. So there it is. So what do you think, Greg? Where do you want to start?
Well, it all started way back in August, September, when we first started looking at projections. And then it went to the departments and committees and whatnot to submit their budget requests and capital planning requests. And then in January, I wrote my town administrator recommended budget. In February, at the joint budget review, I gave an overview, and most of the lines that you see here is from that. Like, there's no change. Most of the budget is from that. But and then after January 21st, it's the select board's budget, and so some recommended changes that the select board have adopted, and what you see here is because we got like House 1, which is the governor's budget. We got the Ask About Vocational Schools assessment. We got our renewal for health insurance. I have my little list here. We reduced the new growth projection by $50,000. So it was at 300, now it's at 250. We hired a fire chief who we don't have to spend, we don't have to pay as much as the past fire chief. So there's a difference there. And then there was some changes in library wages and some changes in data processing, which is like IT. And then, so I presented all that to the select board. And then we've already referenced this meeting where they deliberated over free cash. And during that meeting, which was last meeting, so that was March 21st, they said that they wanted, so I also I made some recommendations for free cash. And then as the finance committee of you guys have already discussed, they made some further changes. So they took 30, well, I can go, and it's kind of complicated, but basically they changed what the free cash, what y'all just saw was what they wanted, and then it impacted some items in the general fund, such as personnel contracts and then the school account. So you can see that here. So that's reflected of all those things I just listed. That's what you see here.
So you mean the school account, that money that was in the free cash to go toward their operating has been added into this?
No, it hasn't yet, because like I said,
Okay, because I was gonna say, all right.
sorry, I was confusing you. Sorry.
Yeah,
But
so-
that hasn't happened yet because like I
Right.
said, that money hasn't been transferred. So
Okay.
then, and then.
That was my question, Alana, too, is that I
Yeah.
just want to, because I think, would we expect that to change though here? Because we would then get one line allocation, so that 80
87
whatever,
and change,
yeah,
yeah.
that should get baked into this one line, right? But maybe expand on the comments that includes the free part of the free cash, because I know that you had a separate article, like for the prior bill, like it's kind of like the same way, right? It's included in the free cash, but then you also have a separate article that reflects that it's being paid from free cash.
I'm confused. Are you saying we should do I'm confused. So this is the other article, so to speak. So like the prior bill says, hey, we got to pay these bills. And then the free cash says, that's how I'm going to pay it. So this is saying, hey, we want to pay these bills, so to speak, these operating expenses. And then, but we're saying later that some free cash is also going to go towards those operating expenses, but it's not entirely the same. I'll get verification that the way I did this is correct, and that I don't account for the free cash allocation in this
Right.
article. I don't think we do that, but I will get verification.
Are there questions, comments within the committee? No, we already know this. We've seen it too many times already.
Alana, I do have a
Yeah,
question.
go ahead.
So Greg, what about the trash sticker revenues? Is that the $50,000 decrease, or are you projecting that the trash sticker revenues are going to stay? Are you?
Yeah, I didn't adjust local receipts. So trash revenue falls under local receipts. I didn't change that. But I said new growth. So our new growth projection from, I don't know, probably September, October was $300,000. And then my chief assessor retired. I got a new chief assessor. He started running the numbers and got a feel of the community. And he said like he wasn't confident that we were gonna get $300,000. So in order to have conservative budgeting, which is that's our approach, I took his recommendations and I recommended the select board that reduce that by $50,000 to 250. And then so we had to account for that. And I presented that to the select board.
Okay.
Yep.
And do you have a reason for is it just new assessor, different methodologies that come in, or is there a driving reason why our new growth is coming less than expected?
Yeah, so I think it's, I mean, I can imagine every person approaches the job a little differently, but so Angie did it based on a lot of just experience. So like she looks at building permits. That's one of the primary sort of driving factors, but it's really tough to judge that, because you don't know how many building permits you get through the course of the year. But anyways, that's one sort of contributing factor. And then Angie Merrimer, the past chief assessor, was familiar enough with the town and sort of like the development in town that she could kind of see what was going to be on the market and what wasn't. And then but our new assessor, he didn't have the same confidence. But I also wouldn't have put it past Angie. She might have also recommended to reduce it by $250,000.
Yeah, I was going to ask, what was the what was the time difference between Angie's initial 300 and the new assessors?
It was, I don't know, probably 4 or 5 months, because I just got.
So that can make it, I mean,
yeah,
that's a decent difference.
Yeah. And in February, I still showed $300,000. So then, so it's probably only been about a month or so.
Mm-hmm.
One last question. Do you believe that our water supply constraints have had an impact on this revenue? No. Okay.
No, because we're meeting our water demand right now. And in fact, unless there's like a significant, like, I don't know, whatever, like Justin DeMarco could speak to like whatever he feels would be like the tipping point when it came to like over water use. I don't know how many, it would take a significant amount of units to be built that would put us over. We are meeting our water demands right now. The concern is like, and I know I'm like oversimplifying like really big complicated concepts that the planning board tries to deal with. But if let's say the Chinese school does go down on Powder Mill, right, and they build all their dormitories, could we handle all those toilets and sinks? Not sure. Well, anyways, it would like significant.
If the mill was converted like half into residential, that was another one.
Yeah, that's right. Like we're talking like a significant, like and I think that speaks to, because I'm not seeing that significant new buildings. What I expect to see, and I think I mentioned this in February, and this is what my assessor is also saying, is like there's not going to be a lot of new huge projects, not like Maynard Crossing. It's going to be like 115 Main Street gets demolished and then the new building comes up. But that's a handful of units, which is good for our growth, but it's not going to be a huge pot at the end of the rainbow when it comes to growth. It's going to be like what we need to see is like stable. That's good. Like you want stabilized growth as opposed to downward growth, which is not growth. Instead of downward, you want a stable growth.
I think to Kevin's point, though, we're doing okay now, but what maybe the idea is that we're not actively courting any larger developments or developers because we know we have some, capacity concern. I mean, if Mill and Main came to Bill Nemser tomorrow and said, we're going to turn it half into apartments, he would have to be like, I think that's sort of the
planning board would, they would have a lot to consider. That's true.
Yeah. Khadijah, go ahead.
Out of ignorance, my question is, what is PEG access?
No, that's a good question.
That's a good question.
Okay.
Yeah, it's weird. And then if you look at the omnibus, which is like the budget, like the more like itemized budget, it's the accounting's strange. So since I've been here for 5 years, for whatever reason, instead of it being in general government, which is generally like that's what you would think it actually falls in, and in an omnibus budget, it's under general government, because that's how we account for it in our accounting software. But for whatever reason, before I got here, it was already taken out on its own. So PEG is public education public education and government.
Government.
Yeah, so it's certain utilities use the public right away. So that's Verizon and Comcast primarily. They put telephone poles and run lines on the public right away on the side of the street. So they need a license to that. And then we charge them a fee, or also like through the license agreement, they pay us money, which is accounted for, called PEG, P-E-G. That should be capital P-E-G. PEG.
Okay.
It's an acronym, PEG access. And so that $346,000 is the use of that money towards, it's like indirect costs, like we transfer it to other accounts. This year, as I said this in February, that this year, that the entirety of that $346,000 goes towards school operating account, but specifically for the support of their WAVM, which is the vocational, it's their vocational programming.
Radio and TV station.
Radio, yeah. So like it used to be split like 90% to the schools and the 10% to the town. Like we bought like the TVs that you see in the boardroom, but like we don't, with the concern that, like one of, Verizon may pull out of town. So I wanted to make sure that we devoted as much as we could to WAVM.
So it goes to the schools for internet and video and.
Well, it goes towards their program, which runs like the cable access TV show and radio station.
Okay.
Primarily, it's their. My understanding is primarily it goes towards their faculty. So like they have teachers and admin and
to teach that program. Yeah.
Okay. Thank you.
Yep. Mary, go ahead.
Yeah, a question for Greg. So the money that we've right now got allocated for education, the 22.2 million, whatever additional funds get added, either it's the 88 plus the 50, or if we go, do the article, will we have this as a base for next year, or will we have that increased amount as a base for next year?
Oh, wow. I guess it would be the increased, because we would increase. That's a good question. I think we would go with the increase, because if we're increasing the 22 million by whatever, I don't like, because not the 50 grand, because that's not going to operating. So it would be the 87 whatever.
Okay. All right.
I think.
Well,
That's what I know. That's what was stated at the select board meeting, right? That would be the new starting number.
Yeah, that's probably, whether we're required, that's what be my expectation. So like that's
I wasn't sure where it's considered free cash, whether it would be incorporated. So
that's a great question. So it would be, so like when for personnel contracts, we shift that money, because we did this last year for personnel contracts. So we shifted that money into the personnel contracts, or contract settlements, whatever it's called, but contract into its own line in the operating.
So Greg, for example, assuming we have a special town, well, we're going to have a special town meeting because we already know some stuff going on it. But assuming we have a budget article at special town meeting, as we usually do, and assuming that this article passes and the free cash article passes, then at special town meeting, the education Maynard line should then have that reflected. No,
only if we change it. So at special town meeting, if we make revisions to the budget, we only show those revisions. So in the it looks almost identical to this article. So it's got the
right
on the descriptions, the column of the lines, and then it shows like literally a positive or negative add or subtraction line of what we change. So like, I don't think you would, I'd have to double check if it would be 22,229,000, or if it would be that plus 87,000 into one. I'd have to, I need to double check that.
Because I was just thinking we usually go by the revision
Yeah. Let me,
for the
let me-
following.
let me double
Okay.
check that. But,
You-
but,
you-
I mean, well, I mean, I'm trying to do one town meeting at a time, guys, so.
Yeah, no,
I
I
know.
understand that. Um,
You-
Kevin,
You guys are talking about Proposition 2.5, right?
No, kind of. That's how the money comes in
Yeah.
primarily. But I think what they're referring to is like when I start, is so like in about August or September, we usually have, I call it a little summit between me and my finance person, and then Brian Haas and Wayne White. And we in August, and we just sort of say like, hey, this is what our numbers are showing us. This is what we're thinking. And so like, but correct me if I'm wrong, Natasha and Mary, but I think this is what y'all are talking about. Like, is that number that I'm assuming, is that, and then whatever I throw out there, like, hey, guys, try to, like build a budget using whatever X, like, this is what I'm thinking if we, whatever. My assumption is going to be that they think their operating budget is going to be whatever the result of this town meeting is. And so that's what they think they need to operate, and then whatever more they're going to ask for. 'Cause
Mary,
that's-
I think, yeah, I think my thought was wondering if like the 87 or the whatever, that would be added into that operating. So when it's presented in the fall, whatever.
Yeah.
It'll be that combined, because that, like, as you said, that is being allocated into the operating budget. So that would be whatever will be baked into that number. It won't be this number.
I
Let's
need to
just
verify.
say,
I know that's how it's going to function, but I need to verify if that's how it looks in accounting. So like it may be in a separate article that you spend from, but it may not be within the same operating. So I need to double check. I just want to make sure I'm not wrong come the fall, but
yeah, no, that would be good, because I know typically people go back to the articles, that this budget article, to see what, is allocated for the different, not normally the free cash as much. So
Yeah.
if we can somehow tie that, that would be good.
Yeah, I'm more thinking about FY 25.
yeah.
That, we're gonna have the base of the 22 plus the 87 or whatever as a starting point. And then to your point, you said we should start at, at least counting on 2.5% above that. So I'm thinking long-term out.
I'm on the same page. That is what I'm saying.
Just want to make sure. Yeah.
Because I know that's what they're going to base their bid. That's what they're going to build their budget on. So that's, yeah. Remind me of this conversation in June or July when I have a new finance director and start building the budget again.
I'm writing it down.
Thank you. I think you're on mute, Alana.
yes, because I was taking a sip of my tea and I didn't want you to hear me slurp. So I think does any other committee members have comments, questions for Greg on the budget article? Okay. Thank you very much for that, Greg. Our next topic, I don't know if you want to hang around, but we're going to be discussing the control AJ from the school department.
I may stick around, but I'm baking
Okay.
bread, so maybe not. I don't know. We'll see.
Is that what I smell?
That's not sarcasm. I just texted my wife to change the oven. I am doing it.
Is it a focaccia? What kind of bread?
No, I'm a sourdough guy. I'm the one. I'm still holding out from the pandemic. All right, that's enough about me. Carry on.
Okay, let me grab the article. Okay. Okay. So, where do you want to start? Do you want to just have a little explanation, Natasha, and then we'll go from there in our discussion?
Sure, sure. So the school committee has separately met several times just to, because we realized the conversations regarding what was coming up are quite difficult, and what was being discussed in the town budget subcommittee, that the revenue wasn't looking to pan out. So we've empowered Brian to work with Greg as much as possible to find a way to get us through FY24, recognizing these budget drivers that we have that are just not able to be absorbed completely within the budget. And I think after we've received the 2.5 and realizing that there did not seem to be a lot of growth or movement for beyond that, the school committee discussed, what to do next because of level service and the amount that we were advised what that meant. It was 500 and some change $1,000 that would have to be absorbed somewhere, which would be a significant programmatic cut. So there were two paths that were being explored. One was every effort was hoping to allow the conversations for budget as new information came about that might help move things along, that might help things look more promising for FY24. But at the same time, we were running against a deadline to consider about if that doesn't work out, should we bring this to town meeting with the intent that if there are significant cuts to $500,000 of the budget, the school committee feels that that should be a town conversation, because it would be a dramatic programmatic impact to services we provide for our education. And that's where we've been. So the appetite has always been that we would always hope that conversations would get us closer to or better, and how can we find a place that we would not be a programmatic detriment to our budget in that sense. It doesn't look like it's working out that way. So that's where we kind of find ourselves now. Oh, you're muted, Alana. And I know we talked about the circuit breaker. That was also part of that parallel conversation, is just how those conversations were, because that was happening around mid-February to early February to now as well. So.
And what is the total dollar amount between this and what is on the other budget article? Sorry, I don't have that one up in front of me because I'm sharing the screen. It's
So the difference in level service, is that what you're meaning?
no, the difference between the budget article we just looked at and this appropriation.
You mean, oh, the town budget?
Yes.
Sorry, okay.
Well,
I think,
flip backwards.
It's about 500,000.
yeah, so if it's
I get 515,000.
Yeah, 515, 843.
Thank you.
so the 257, ideally would have gotten us partly there. And that's where we were working with the superintendent to see, okay, we would maybe rely more on school choice, some of those other areas to get us through, but we're not there.
Okay. And okay, to raise and appropriate or transfer or other available funds. So this article, and Greg, maybe you can chime in here. This article doesn't specifically say how we're going to balance the budget if this passes. So is the presumption that if this passes, we go into the fall with an unbalanced budget and fix it somehow at special town meeting? Okay.
Yeah, that I was gonna, but there might be, yes, that is my presumption. Only because I don't even know if the legalities of changing on the floor all the other budget items. Two, that's not really appropriate to start deliberating over like this is a significant amount of money that you'd have to find within the budget otherwise. So I wouldn't even advise the select board to even go that route. Like you and so you'd want to have like the summer to be able to deliberate amongst like
Okay.
all the stakeholders.
So my second question is, if this passes, we go into the fall with an unbalanced budget, and we go into special town meeting with an article to either transfer from general stabilization or do an override, and that fails.
Or adjust the budget otherwise. So like
Well, we're gonna have a solution at STM.
yeah.
We are going to present a solution at STM. What if that fails?
So one of the things
have to s-
also that
we
is.
would
oh,
have to-
sorry.
Yeah,
We'd
can
have to
we?
schedule another special town meeting.
Okay,
Otherwise, you can't set a tax rate.
Yeah, you can't set a tax
Okay.
rate. Yeah, that's right. Yeah, I'm sure
We
this
need
is
to have a balanced budget. So if our
yeah, I'm
solution
just
fails
trying to,
in the
this
fall,
is new territory, and I'm just trying to make sure we understand all
So
the,
there's
what's gonna happen.
possibility of, I know we've kind of heard talk about it. So for instance, if the revenue from the, what is it, the fair share, like, we don't know what that has come out yet, right? If that's gonna hit FY24, maybe that might change in some way that we don't know now, but is supposed to be worked out before the end of the budget cycle is
but
finalized. That would, might change some of those revenue expectations to help inform.
Yep, I understand that could be a possibility. I'm just trying to,
Mhm.
Understand what would functionally happen if at special town meeting, what we came up with for this amount was a transfer from general stabilization, and at special town meeting voters did not approve that. Just as an example. And so the answer is we would have to have another town meeting.
I think so.
I think
would
so
defer to
too.
Greg,
I'm not sure because I think you would
I think
have to vote in a balanced budget eventually. So eventually we'd have to have a town meeting. But I'm not sure if the Department of Revenue would like penalize us, maybe if they would like reduce our free cash certification, or I don't know. I've heard of other towns that don't have that they have not like finalized their tax rate until but I don't know how they
I'm not sure that this is not an unimportant part of the discussion. The reality is if this passes at annual town meeting, we will go to your point, Alana, we will go into special town meeting with a solution. If that gets voted down, then we'll take that at that point. Right now, we have a matter in front of us, which is to make a recommendation on AJ.
Yep, agreed. It's just a little, new territory. So I just wanted to understand some of the mechanisms.
I
Go
do
ahead,
have
Kevin.
some questions. So very quick questions regarding this. So what, for Greg, what is the month that you set the tax date on?
we do that on either the end of October or the beginning of November.
And how late could that be delayed potentially?
It's a good question. Not much later than that. And I think the Department of Revenue wants it by the end of November, but don't quote me on that. I'm pretty sure we lined it up to that. That's generally what we do.
Okay. And my second question for Greg is, let's say this is a concern, hypothetically, of the select board. They do have the ability to call more than one special town meeting. Like, we could have a special town meeting in the summer to get on this early if the select board so decided, if they want to ameliorate that risk, however significant it may be.
In theory, yeah. But there's
we just have to remember that there is quite a bit of expense for having a town meeting. So
and then you just get like voter fatigue. Like it's tough to get to turn out as is.
But yes, you're right, Kevin. They can, and as a matter of fact, they even have the right to call an emergency town meeting, and then all of those like 30-day, 60-day, whatevers are gone, basically.
So I think there's plenty of safeguards in place, Alana, that the going into a violation of Department of Revenue guidelines regarding
Right.
balanced budget is a remote possibility, so long as we are proactive and so long as the select board is proactive and takes the appropriate steps.
It's so there are other factors. So let's say I'm asked by the credit rating agency, do you have a balanced budget? And we will say no. So like there are other, and I know you guys appreciate this. I'm not trying to like patronize you, saying like, I know you take this very seriously. That's all I'm trying to say is like, it is a very serious act to not have a balanced budget. Of course.
But we did that in 2020. We did that in 20. Well, we found that out in, I believe, FY 2021 because of COVID. We had some increased expenses and we had to go hold a town meeting. And in fact, I think we recall we cut the school budget to accommodate those increased expenses in FY 2021.
No, we had decreased in revenue projections.
Decreased revenue projections. All right, but we had discovered we had an unbalanced budget because of decreased revenue. We called we went to special town meeting, the standard special town meeting.
Yep.
And in that special town meeting, we decreased the school's budget to reflect that decrease in revenue.
Yep. And that looked good in our auditing reports to our credit raters that said you did a good job by not overexpending.
Yeah, and in fact, special town meeting, there almost always is budget changes for sure.
So I don't see why this is anything different than what we've done in the past.
Because it's $500,000.
Yeah, it's a lot more money
huge
than
amount
we've
of money.
ever talked about.
Yeah.
Go ahead, sorry.
I mean, this is a ridiculous hole to blow in the budget. This is not a minor thing. And I mean, the most likely result that we're going to do at town meeting in the fall is repeal this. That, it may feel good to try and pass it in the spring. We're going to get to the fall, not have the money. The schools are going to be operating on some inflated budget, and they're going to have to make, a $500,000 cut with only 8 months left.
Yeah, but you're ignoring the fact that that would also precipitate a discussion at annual town meeting and in between annual town meeting and special town meeting on the situation with the school system budget. So I get the fact that we might pass it only to repeal it, but in doing that, we end up having a discussion as a town about our priorities, including our priorities towards the school system. So I don't know that passing it to repeal it later is necessarily a bad thing if that's what ends up happening, as long as it's prompting a thoughtful, mindful discussion about the school system.
And I think town meeting voters would appreciate at least even just having a discussion, because right now if we didn't have this article, we wouldn't even be having the discussion. And I think you're also assuming, Peter, that you're assuming that your repeal is the only option. I mean, there's overrides, there's stabilization transfers. We could find the money, we could move the money from one department to another. There are many possibilities. I significantly think town meeting voters would appreciate having a detailed discussion of how we are allocating our funds.
I think you're right, and that makes some sense, and what Ken is saying sounds right. We're not talking about 50,000 on the margin. This is a huge amount of money, and 500,000 is probably, and I'd have to do the math, but I think it's probably more than the total increase to every other department in the town budget. So it's not a minor, small reallocation.
It is
sorry, I'm speaking out of turn.
not minor, to be sure.
Yeah. I see some hands raised. I'm going to go with Jillian first on the committee, and then I'll get to you, Natasha.
I also wanted to say, I don't think we should underestimate what this could mean going forward, because my understanding is this would become the new base budget potentially. And so each year this would increase after, is my understanding.
That is correct. And I do think I'd have to go back and look. We had Greg's presentation at the budget meeting in February showed the total amount of increase that we got with, Prop 2.5 and new growth. And I believe it was somewhere in the $800,000 range, Greg, is that right? And so the increase that
I
was,
think it might be closer to 900.
So Jill is absolutely right. This becomes the new thing. And that's what level service budget is about, but
right,
she's absolutely right.
yes, I
Okay.
know. Can I finish my sentence for a second though? So the amount that was already added to the schools in the budget article plus this, I believe does in fact eat the total or close to of our entire Prop
Yeah,
2.5 and new growth.
it's pretty close.
Right. So to Jill's point, starting from there next year is certainly a challenge. Natasha, go ahead.
I think that's the point, is that we are at a place now where, and Greg has said this in our budget meetings, that we should, because new growth is plateauing and we are not getting a lot more revenue from the state, that we should not be expecting more than 2.5%. That has been what has been turning out. And so what the school committee, with this article and what we're saying is that that is not sufficient for level service now this year or in future years as we are looking at the numbers. So this is where that town conversation needs to happen about, these are our priorities. These are the areas, Maynard, this is what it cost to have these services in our town. This is whatever trash, there's a whole, we're talking about the school, but the school is not alone in all the other areas. And so whether we want to make it about FY24, this is going to be another conversation in FY25. And I know we've all committed to, after town meeting, talking about FY25 and a potential override. I think that's where the conversation needs to really be thoughtful of that, because we know that our expenses as a town are exceeding 2.5% on an annual basis. And we are not doing justice to our community by not informing them of that, and then giving them the opportunity to say, hey, where do we want to either pull back, or where do we want to expense? How do we want to expense for that? So that's, I just want to make it clear that it's recognizing a lot of those things, but it is certainly a town conversation, not just really for the school, but overall. This isn't a school article, but I think we all realize that it's not just the schools are having this issue.
Natasha, in terms of budgeting and looking for, ways to continue to give services with the limited resources the school's been given. Do you know when the last time the schools have looked at like building a zero-based budget?
Well, I can tell you not during COVID. So I know that there's 3 different types of budgets, and we've looked at them when Wayne started on how to do them. The ones with a different unit, I think it was the one looking at where we were, seemed to be what worked best. So a lot of it also is because some of these services, like we talked about PEG earlier, looking at FY25, those are monies that are not going to be, how is that going to be subsidized? That monies are going to be running out, and that's going to have to add it into an operating budget per se. So there's just a lot of these things that are coming down the pike that whether we talk about FY24 or FY25 could be, if this doesn't pass or some adjustment to FY24, you could be looking at 9% in FY25, just because we also have the teachers union contract that's coming in FY25. So I just want to, we're looking this one year, but it's also long-term as well. And
Okay, other committee members? Kevin, go ahead.
Yeah, so I just want to point out that for over the past year, the inflation rate has been 6.04%. And the long-term average is 3.28%.
Want to see your faces. Yeah.
Which means that just due to inflation, the purchasing power of our town budget is decreasing faster than the rate that Proposition 2.5 allows for without an override. So the financial reality is that we can kick the can down the road for some time, but we are going to be forced to, by inflation, to either make the very difficult choice to either cut services or to do a Proposition 2.5 override. That's just how the math works out. If inflation is over 2.5%, you're going to eventually have to increase the budget by more than 2.5% or cut services. So the financial reality is that we really don't have a choice. An override is coming. The only thing we could do is possibly delay it a year or two, but it's coming. If we look at our health insurance expenses, that's gone up 8% per year. Companies' services are passing on the cost of inflation onto us, and that is rising faster than the rate Proposition 2.5 override. And really, all the schools is doing is bringing to town meetings voters' attention that they have a choice. They could either see their children receive less services, or we could go through the painful but necessary process to save the current level of services we have and go through with a Proposition 2.5 override, or do some extraordinary measures that could possibly kick the can down the road until our financial situation may improve. But I think the financial reality is that this is that we either have to do this or services are going to get cut. And I don't think the schools are alone in this. I think DPW is going to have to do this. I think we as a town are going to have to do this. And the schools may be the tip of the spear, but other cost escalations and service cuts are going to be forthcoming.
Alana, can I just say one more thing? Sorry. Just to kind of wrap it up for the school. I guess the request the school committee would have is that they would recommend that the circuit breaker be returned to the school department for FY24, recognizing that we all know that that is not an ideal process, but it will get us through FY24 without this override conversation that needs to happen for FY24 at special town meeting, because our superintendent has already informed us that we can do cuts that would not be programmatic and will get us through FY24. And we will then talk about an override in FY25 and reserve that conversation for that point. So that's where I think the hope would be that we would guess that the FinCom would support that agreement that was in the works that will allow us through FY24 without bringing these extensive what to do at special town meeting in October. And as we've said before, we would withdraw the article if we're able to know that we can get to that part without having to cut programmatically across the board for $500,000.
Okay, so give us 256 above what's already on free cash and we'll withdraw this article. That's what you're saying.
It was no.
257 altogether. So yeah, if to add to the 88 and I guess the 50. So whatever the differential of that is, you don't, I feel badly because it sounds like a threat. It's not a threat. It's, we do not want.
Sounds like extortion a little bit. Yeah.
I know.
No,
That's what we were
it's-
hoping. That's what we
Right.
were hoping would happen when there was conversation between
I
Greg
get you.
and
No, I get
Brian
it.
before we even presented the article. That's actually what we thought was going to work out.
Right.
Yep.
We
It
really
sounds like
were working
negotiation to
hard.
me, Alana. It
Okay.
sounds like negotiation, not extortion.
Yeah, we really don't want to bring, we really work.
Yeah, we're not
we don't
pocketing
wanna
any of
bring
this money
article.
personally. It's not extortion.
Right.
Sorry, go ahead, Peter,
The only
because I lost my thought.
other thing I need to throw into this conversation before we're too freely talking about an override and, whether, this year or next year is some automatic or guaranteed thing is we're going to be looking for a school in the fall. Matt, I mean, I think FinCom owes it to the town and town meeting voters to discuss this stuff straightforwardly. But I think if we're too much talking about, oh yeah, and next year we want another $700 for an override, I think that damages the possibility of the school passing this fall. So I think that's something we need to bear in mind also.
Mhm.
And then just on the kind of general thing, and I don't want to repeat the word, but I mean, I totally see this as the schools advocating for what they think they need. I think it's entirely appropriate. I think it's good, and I'm not sure I'm going to recommend it because I have a bigger picture, but I totally think this is what tough budget discussions entail, is they want to put it to town meeting voters. And I think that's entirely appropriate. So I certainly advocate, I endorse their advocacy for the schools, but I just don't know if there's enough money for it. But
Was there discussion to put forward the article with 257 or whatever that number was instead of this amount?
So no, I mean, to be honest, I mean, the school department will always advocate for level service. So I don't think you're ever going to get us to put forward and advocate less than level service. And I think that's where we're firm on, but recognizing the financial landscape of the town and all the asks that we're talking about, like the Green Meadows School, the school committee was willing to say, okay, how can we meet halfway for whatever lack of sense and say, okay, we know that we're not going to get level service. We will have to cut, we will have to dig into an account that we, for more than we normally like to, even though we're getting less revenue too. So that was kind of our way of saying we would do all of those things, recognizing if that 257 can come in, because that will get us through the year. When it came back as recommended less than that, it's getting into programmatic cuts. That we feel like it's just a matter of, it needs to be a town meeting discussion.
Okay. Other questions, comments, thoughts from the school, from FinCom members?
I just have a quick question wanting to understand the amounts. So the, Natasha, the extra 500 and odd change is what's being asked for on that article. But the 80 and the 50 that was appropriated from free cash, is that in addition to the 500, or is that
It's separate,
assuming
no.
that might not be expected?
Right, so that hasn't been appropriated yet, and the article was put forth before all of those conversations kind of played out. We initially thought that maybe 257 would be what would be coming back to, and so then that would be pulling it back. But since it's less than that, but we would, above what is Greg has in that education line, the 22.2, if we were able to add the 257, it could even go, our superintendent even said that, put it even into the special education revolver. If you don't want to put it into the operation, he could, find a way we get expense out of there. That would be, provide that oversight from the select board and the school committee to expense out of that fund. If that's, apprehension of putting it into the operating budget. So that's where that number, it was created before, was just the difference between the initial recommendation from the town to what we have for level service.
Okay, thank you.
Thanks, Katie. And thank you, everybody, for the conversations. I know this is a tough one, for everybody. So
Very much appreciated.
Any other
Alana,
Yeah, go ahead.
can I just ask, where are we at on getting the school budget files that you talked about?
I sent an email right before the meeting started, and I also had,
Okay, sorry, I haven't seen it. I'll
yeah,
forward it.
no,
Peter.
it was, it's not gonna look the same budget book because that was a presentation Michelle Resendez had put together for that FY19.
No, we weren't asking. Yeah, we weren't asking
No.
for that. We were
Yeah,
asking for
but
the,
you have there's a line item. There's a whole bunch of files that were sent over.
Yeah. I will forward those on.
But
Did you have something else, Peter?
okay, I kind of want to work through the chair on this, and I don't want to get through into individual discussions, but I would say
Okay.
I think it will be a major issue. I mean, my understanding of the file I had shared with you, Alana, is that it's a
Mhm.
report from the school accounting system. It's not a presentation or something
Right.
that needs to be put together. And without that, there would be a whole different discussion at town meeting. That,
So there were Excel
Um,
files that were emailed. It just wasn't.
Okay.
Yeah. It just wasn't, I was referencing, you had mentioned, Alana, you wanted to prefer an Excel format. And so that Excel formatted one that you had shared was one that Michelle Resendez had built
There-
over
no.
a period of time.
No, that was one
Well,
that Peter had
no.
done, but it doesn't matter. But
I converted the
Yeah.
PDF file that Michelle had sent into an Excel file.
yeah, there you go.
Which is where
Okay.
the Excel file comes from. But we can work with the
We
PDF.
can
if
work with
that's all you
PDF
can
or
do.
Excel. Yeah.
No, it's an Excel file that was sent
Okay.
over. So for FY 21,
So-
22, and 23.
But what-
We should look at
yeah.
that first, I guess.
Well, we were just
Yeah.
looking for the difference between one with DOE codes and one with actual,
Yeah, the line
What do you
item.
call
You
it?
wanted the line item, right?
yeah.
Same- Yeah,
Yeah,
the same
that's what
level
it
of
is.
detail.
Yeah, it has a line item of all the accounts.
Right. The account. Yeah. Mhm.
Yeah.
That sounds right.
Okay, thank you.
Yeah, just one big
Yep.
dump. So it wasn't pretty. So that's, as long as you know that you're gonna be playing with it later, that's fine.
Khadijah, go ahead.
I just get confused with putting the school department lines in different buckets. I like to call them buckets. So it does the school department Excel spreadsheet have the other buckets from like the free cash line or the revolving funds, like are all the school funds in one bucket and one Excel spreadsheet, or are they spread out? Because it to me it's confusing to know what is the total school department budget is something here and something there and something there. See what I'm getting at?
Yeah, no, that is a very good point. There's their operating budget, which that we've seen right now in this annual town meeting is that 22, whatever it is right now,
Mhm.
right? But there are there's other some other funding sources and some other spending that's not in that line item. I think that's what you're getting at. So for
Right.
example, the amount that you see in that budget article for employee benefits, about
Mhm.
75% of that is for school.
Right.
But that doesn't go into their operating line. That comes out of that one. But it is school spending. Does that make sense? I think
So
that's
it's not part of the 22 million?
correct.
Right,
'Cause
the town is just one allocation for the operating budget. That's what the MGL requires, is one line allocation for the operating budget. And then what happens is the school department, the school committee, then take that number and then we allocate it into different cost centers, which then feeds into that line item that ends up being created. But they're all, just like every other department, you have grant funds that come in, we have the school
Mhm.
choice is a separate revenue source that comes in, that's tuition, that doesn't go directly into the operating budget line. We might expense to it depending on, if things are, and that's the benefit of it. If we don't have many other like unforeseen circumstances that might come in, that allows that flexibility to continue with education if there's a disruption during the year.
Okay,
Yeah,
it's
so I
just, It's
I
hard to
know,
get.
it's absolutely, and it'll take some time. and
Khadijah, you're right to be confused. I was
Yeah.
on school committee, and it's sometimes hard for me to keep it all straight. Peter has been on the FinCom, I think, since 1871. And so he is, I'm sure, sometimes wondering about it as well. So it's not unreasonable.
Yeah.
It's very
Okay.
arcane. It takes a while. You will get there, but you know, it is not for the faint of heart, to be sure.
Yeah.
We're still learning ourselves, so just so you know.
Yeah.
Yeah, no, I just want to say, you're not wrong for feeling a little bit overwhelmed.
Absolutely.
The
Thank you.
school system budgeting in the Commonwealth of Massachusetts is, I mean, yeah, I think there's, there are probably, entire biblical passages which are easier to interpret.
Okay, do we have any other comments or questions for the school committee members that are here before we go? Go ahead, Kevin.
Yes. So Natasha or Mary, when do you have to make staffing decisions? What is your policy regarding the staffing decision?
So Brian has already given, I believe it's this, well, it's the 60 days, I believe, is where you have to give notice that if there's potential cuts coming down, that that would happen. There have been some already non-renewals, which are not necessarily due to programmatic issues, just we still need a position, but that person was not yet tenured. And so those kind of changes have already occurred. But it's going to come down to what we approve for the budget. And that will probably happen in the very near future.
But to answer your question, Gavin, May 1st is the deadline, the absolute deadline. So that's why, if we get money in the fall, sometimes there's been conversations about, well, if there's money in the fall, we can give it to the school department or give part of it, but it's where so much of our funds are employee related, it doesn't do us as much good as it does right now. Even the conversation of having, the question about, well, will this position be cut or that? That's why we don't have those conversations. It gets people worried about their jobs and they start, potentially looking for other positions just because of the fear of getting cut. So.
And my next question, is there expense to saying cutting a position only to add it back later in the year
Of course.
before school starts?
Well, before school starts, you wouldn't necessarily, because you have to wait until staff are to hire, because the jobs have to be posted. It's a union, so you have to allow the union staff to apply for an internal position. So if we're cutting, I don't know if we wouldn't be cutting over the summer, I guess, if that's what you're meaning.
So let's say it comes to May 1st or after town meeting. And let's say, like, okay, your article did not get improved, so you have to cut staff. But then later on, we discover that, hey, there's some funding available from the Fair Share Act, for example. Would there have been an added expense of having to cut a position only to add it back later when we discover more funding versus just keeping that position?
Well, if you lay somebody off, you have unemployment. I mean, that's just an added for any place. You have unemployment if you cut a position.
And so in the private sector, they typically give out severance. I don't know if the schools do that or not, but are there severance costs as well?
I'd have to look. I don't know. I know that the last time there were cuts, it was the Excel FAST program when COVID started. And I don't recall there being anything like a severance package agreed upon. No.
It's also incredibly disruptive to the educational process for the kids.
Right.
I mean, so you've got a teacher who leaves, or a teacher who sits there and says, enough of this, I'm going to go somewhere else. Not having a level service budget is problematic to a continuous high quality education.
exactly where I was going to go, Ken. The learning curve of bringing in a new person versus, you know, the continuation of the constant staff is definitely disruptive.
And there are, I will say, just as I'm sure everyone is aware, that there's teacher shortages everywhere. So to actually get rid of a teacher and then have to post it and try to hire when you're hiring on the off season too. So, you know, you go from maybe having someone that knows Maynard, knows our students, to then hiring maybe in a less optimal time that could result in someone who got laid off somewhere else, or maybe, I don't know, just that's what you're dealing with when you're hiring in the emergency situation.
All right, thank you.
Okay. Any other questions before we move on in the agenda?
Can I ask a
Okay.
question?
Sure.
Is the belief of the FinCom that, because I haven't heard any like recommendation discussions about this, but is it that the FinCom would recommend, is that the conversation that the school committee cut their budget to what is allowable? Is that what, I think it would just be helpful to understand the consensus of where the FinCom is going to.
I
Yeah,
don't
we
think
haven't-
we've made it that
We
far
haven't
yet.
had our recommendation yet. We were talking
Yeah.
with you tonight, and our plan is to have our recommendations done by our next meeting, which is next Monday on the 10th.
Okay, so you'll be talking about it at that point.
Yeah, I mean, we'll see how far we might start some recommendation discussion tonight, depending on where we get.
Okay.
But my guess is that the majority of it will be at our next meeting.
Thank you.
And then some might get pushed beyond the next meeting.
Yeah. If we'll see how we can do.
Yep.
I'm holding out hope. Okay, so our next agenda item is discussion for the citizens petition articles. I will pull those up. I don't see Mr. Stillwater. I did send him an email, but it was it was just brief and didn't give him a ton of lead time because we were making these meetings pretty quickly. So, but I will bring up the article, and we have gotten, is this right? Yeah, this is the stretch code one. We have gotten 2 emails. They are on board docs for this meeting. They have also been forwarded to you all. One is from Justin DeMarco and one is from Bill Nemser with regards to this article, because we, as discussed in a previous meeting, didn't feel like we had a lot of expertise to know how to make our recommendation on this. And the thought from both of those emails was, and you can see here just how he did it with the taking out of the old and replacing with the new. You know, Bill Nemser, planning board director. Sorry, I'm going to get your title wrong, Bill. I apologize. Town planner. He had the thought that this is, you know, these codes are likely where things are moving, but that this is maybe moving a little too quickly for us in particular, which was sort of the thought we had. Justin's email was a little more detailed, as Justin loves to be, and but we had the same sentiment that, you know, this was a little too far too fast for their opinion. So I don't know, after reading the article and their emails, if there were any questions or discussion on this one.
I still feel the same way I did before, which is, I mean, you know, these are things, these are decisions to make deliberatively, thoughtfully, you know, with a fuller understanding of, you know, of the implications on the town. And I don't know that we have had that thoughtful exchange.
Anyone else?
Um,
Yep.
I would second that, and then I would ask Ken. I was going to ask. I'm sorry, the citizen,
Mhm.
but just Ken, because you're closer to planning board than I am. Or do you know, has the citizen proposed this to planning board? Has there been any more thoughtful discussion, or the route to do? My ideal route for this would be you go to planning board and say, I think we should adopt this. They talk about it in a long process with expert advice,
Mm.
and then make a recommendation, as opposed to going straight to town meeting. So I'm just curious if you know if
I
that's
don't,
happened.
I don't recall. I remember, well, I think we'd have to reach out to the planning board to confirm
Yeah.
that. I don't
Okay.
To
believe.
confirm, I do
I
know
think
that,
the answer is no, but again, I don't know that.
I do know that there was discussion in the sustainability committee about these, and that the thought was not to push this yet. That the
Oh.
citizens petition is separate from the sustainability committee as a whole.
That's okay. That's interesting.
Personally, I just wonder if we actually have the staff to enforce this code, or if our existing town staff has the expertise to even start to enforce this code, or will they need to be trained up on it? I mean,
Mhm.
and while I do think climate change is a important thing to address, I am also concerned about environmental justice. And
Mm.
as I said before, we are a working class town surrounded by upper middle class towns. And I significantly wonder if really the burden on being the first, kind of one of the first towns to do this, should actually fall on Maynard, or possibly should another town, or even the state with more resources to actually implement this, should actually be the first ones. I don't think Maynard should be the first one. We don't have the resources to do this, or to do this right.
Thanks, Kevin. Anyone else? Thoughts or comments on this one?
Well, I would just
Mhm.
say that this could be restrictive. It could limit future development. And though we are, the state and everyone's moving towards it, it may not be something we want to do right now. So,
Yeah.
Yeah, I'm in agreement with Khadijah and Ken and Peter, and yeah, all those same thoughts, 100%.
Okay. And then the other one is the Green Meadow to be designed and built to operate without a fossil fuel for heating and cooking. And this one, as we were advised from town council, would be an advisory, not binding, because the way that I understand it, you can't take away the ability of the of the body that is in charge of the building with a citizens petition article. So this can pass, if this cannot pass, and either way, the school may be built in either way.
And it seems the most recent ask is that they're asking for funding for geothermal. So it's likely, well, who knows, but
Yeah.
that this will matter anyway. But
So is that the update, Katie? They're actually leaning towards geothermal?
yeah, the last, is it schematic design, if I use that phrase right, it was to go with an ask of a budget to include geothermal. They could always scale down, so that's not
Yeah.
a guarantee that it would happen. But the budget would be there potentially for it.
Yeah, they added it in almost like an add alternate, but
Yeah.
it's sort of so that, because we have to go to town meeting with a total, but they're, or we have to go to MSBA
Right.
more closely, or closer in date, I should say. We have to go to MSBA with a total amount. At that point, if they okay that amount and we scale back some, that's all right, but we can't go over that. So
See,
they went,
I would say
Yeah.
the same thing about this. This is something, this is not the process that you follow to go through and do this. You're part of the design process. In the end, you go through a thoughtful process on your design. You don't constrain yourself up front, with something like this.
What about the merits though, Ken? Like, let's set the process aside, right? For a
No,
second.
I don't think you do set the process aside. The merits are discussed and deliberated as part of that process. Okay, so this would be analogous to sitting here saying, recommend to the select board that the proposed new Green Meadow Elementary School doesn't cost more than $400. You don't go into something constraining yourself that way. You go through a design process saying, what is the need? How do you do that? What are the trade-offs? That's the process that you go through. I do think that there are merits. I certainly heard the merits discussed at the meeting, and that's the point, is that they get discussed at that meeting. You don't take it out of the hands of the people who are looking at this.
But so I guess my question, Ken, is how would us as a town determine what the popular sentiment is? Because we have a very contentious debate between different boilers, different heat sources. And it may very well be that the loudest voices are getting heard and that there's a silent majority that has a differing opinion. So my question to Ken is, if not through this article, how would we assess what the popular sentiment would be?
Well, so it's not going to be a town meeting vote. It's not going to be a town meeting with a few hundred people with an article put forward by a set of petitioners. My point is you're sitting here constraining a decision unnecessarily when that decision can be deliberated and there's opportunity to discuss that through the whole thing. To answer your question, how do we get the view of the town as a whole? That's what open meetings are for. You come in, and if you feel strongly about it, you come in and you make the case. But you do it in the right venue. Just my opinion.
I mean, have we been keeping track of how many people have voiced support for one option or another? I don't think we've been tracking that. I think the fact that this is advisory turns this into a useful tool for us as a town to assess where the popular sentiment is. I don't think there's anywhere close to another tool available that could get us a close to a quantitative assessment of where town meeting voters lie. Granted, of course, there are some systematic issues with town meeting and participation in town meeting, but that's not on us. It's on town meeting voters to show up and have their voice be heard. I think our job is to provide the opportunity for them to be heard and for us to listen and to give us and the select board a picture of what the people who care enough about this issue to show up to town meeting to vote for it, what they have to say.
I get that. And that my point is there's a process and a venue. There's an open forum for that. And that's with the Green Meadow School Building Committee, not in town meeting. Again, my opinion as one member.
okay. Well, given that that this is advisory, we will certainly vote a recommendation and do our comments as we do for all. But again, the outcome of this is not going to be something that the select board is held to in order to move forward with the Green Meadow Elementary School design. Okay, anything else on that one? All right. Okay, so we have now, I believe, as I'm going to open up the tracker we have here, but I think we have gone through discussion for all of the articles. So I will put it to my committee here. We do have a few other things to discuss this evening. We have Bob McCarthy here. I'd like to quickly go over some of his work and the things that we have sent. He has sent, and we just have to do minutes and some chair and member comments. It's now 9:35, so we could start going through some of recommendation voting tonight, or we could, at our next meeting, start from A and work our way down.
I think
And that's our meeting.
my preference would be to go through the rest of our business. And if at the end we feel as though that there are some that we want to vote on, that's fine. But, Bob's already been generous and hanging on through the whole time. So I'd prefer to hear from him sooner rather than later.
Okay. I think I agree with that. I mean, I think if our whole next meeting is pretty much devoted to getting through these, I think we can do a really good job. All right, so hi, Bob. Thank you for being here.
I have to unmute too, sorry. Yeah, you're welcome.
Wait, who's Bob?
For those that are new, actually, that's a good point. For those that are new, let me introduce Bob McCarthy. Bob was on the FinCom. How many years, Bob?
Well, 17, if Peter was 1871, I'm saying 1779.
Yeah. Bob recruited
him a little
me,
bit.
so he was before me.
Yeah. He has since retired off of FinCom, but he has graciously offered to provide us some of his wisdom moving into annual town meeting. And I sent you all some slides that he was working on and is looking for some feedback, and before he is off for a lovely vacation. Good for you.
Actually, I'm not going to do it on the 20th, as it turns out, so I'll be around.
Oh.
But he's certainly around a little bit more than I
Well,
thought. So I don't have to go quite as fast, but
fantastic.
yeah.
Great,
So go ahead.
that gives us more time for these to get them in a good place before our public hearing. So
Yeah.
happy to hear that.
All right, literally 30 seconds on history. The last time we did this particular kind of presentation was going to be in FY21, so 3 years ago. And it never got presented either at a public hearing or at town meeting because of COVID. So right as we were getting to the point where we're looking at looking ahead 5 years and looking behind us 5 years, we had done it a little bit in the past. Peter and I worked really closely together on a number of presentations like that, and so did Jill and Ken and I. So it's really, I've tried a bunch of different times to figure out how the few people who would even read a little bit of this would like to see it presented. And I still probably don't have the formula right. I'm not the most succinct guy in the world, but I'm trying to give you this overview. It's also the summary. And I've learned about PowerPoint. You tell people what you're going to tell them, and then you tell them what you told them. And I tried desperately to keep it below 20 pages and it slides, and it really is 17 here, but there's an appendix. And that's kind of if people want to dig deeper. But overall, if you put this in presentation mode, if you could, can you do that?
Can you see that?
Yeah, and so if you go back once, I guess this one isn't. This is the topic, so this one doesn't have any. There's two very simple animations, and they're not fancy. But
Animations.
Yeah, in other words, this one, the next one is supposed to give you, it's not doing it.
Oh.
Yeah, sometimes
maybe-
it doesn't work when you present on.
Oh, I might, yeah, I might, I have this on Google Slides.
It
Maybe
doesn't
it's
really
different.
matter.
Okay,
It really let's not get wrapped around that.
okay,
So if you go back,
Yeah.
the first slide looks a lot like what we did in FY 21, and a lot of the graphs, all of the graphs really were done off of spreadsheets by Jillian. And I'm still begging her to do, one or two more because I just have a really hard time with pivot tables and that kind of graphing.
Mm.
But when you can put them in a slide presentation, you can put a lot more annotation, and this is what is being
Right.
compared here. And some people will learn visually a whole lot more than with spreadsheets and tables.
right.
So
So
we try to do a little bit of both.
Yeah.
Yeah, so
Which
you can
slides?
keep it back,
Okay,
back at the beginning. So, yeah, so we're going to go over the relevant warrant articles, and that's really you guys, but I've put in 3 for now, which are the free cash, budget, and the school's request for more money. And at the moment, until it comes off the table, some of the analyses are related to what the original TA recommended budget was for the schools and what it could be either as a level service for years to come, as we discussed, not just FY 24 or 25. And what would be the impact of that and what would be the deficit we've been trying to cover. So we have a target doing this kind of analysis with assumptions about what we need to either raise as, through an override, raise through new revenue, raise through advocating for more state aid or whatever other revenue source we're looking for. But I think me personally, it's very imperative that we have some idea of what that number we're going to be challenged with is in the next few years and look at that every year in order to be able to have the discussion a little bit more based on what the impact is, like we did tonight. There are 8 major budget categories. If you rank them to highest to lowest on expense drivers, it's not by percentage of the budget. It is in some ways, but not by their increases, but by the dollars they represent that we have to raise in order to cover each year's growth of expenses. So we get a lot of that detail here. And in the appendix, I've started to put things like fund balances, which many people will want to look at right away, but it sort of takes away from what might become a good public hearing summary, which is even more succinct than I'm going to show you, hopefully to get the message across to voters, which I think we've heard a few people say today. We owe it to them to give more context than we sometimes have in the past. So that's what it's about. So if you look at the next slide, and I don't know if this one will go, yeah, it's not really it's trying to do an animation, but it doesn't. But, I go by major bullet by bullet, and I'm not going to read these, but overall, you can see at the bottom, the overall intent is to review a number of data points and then share it between the 3 boards and the town administration. So that when you get to the public hearing and then the town meeting, and we'll take steps each year to improve on this, but you get a chance to actually have the people on the stage at town meeting have a relatively unified, voice. It's totally appropriate if any of the board members have a dissenting opinion, they go down on the floor and they express their personal opinion, but it sure looks better to the populace if there's an awful lot of the town leaders agreeing that under difficult circumstances, this is what we've come to, and we think this is the right choice for this year. It'll be especially difficult, as we heard, this year, right? All the more reason to look ahead, in my opinion. So in addition to what I put in this in the past, you'll see an asterisk there where we talk about, the tax burden, and especially the burden on people who are either fixed income or for whatever reason have less of an ability to pay whatever glib way we try to say, oh, it's not that much more money on the tax bill. It's like N cups of coffee. I really resist using those kinds of analogies for people that are on fixed incomes, for instance, because affordable to, me is not necessarily affordable to others. So what are those average tax bills? And can we give a couple of very simple formulae that allows them to judge based on what we want to do with the Green Meadow School or an override, what it means to them? And not just taxes, but water and sewer fees, fees if you're in the schools, all of that stuff. We're not going to be able to present all of that, but we can present enough on the operating budget, revenue and expenses to let them make more informed opinions about what to do this fiscal year when they vote. All right, move on.
Okay.
If you have any questions, we've already talked about both of these. I just happen to put them in as placeholders. They don't have to be presented this way at all. We move down to the next one. If you take what the school has asked for, the numbers that were asked about here, the deltas between what Greg put in the town, the TA recommended budget versus what the schools were asking for are elucidated here. So originally what that ask to get to level service would represent is a 4.9%, 4.98% or 5% increase, which would be another a total of $1 million increase over FY23. So it gives you some scale there. And then below, this is a tabular way to present some of this, but this shows what FY24 would look like. And then instead of just saying level service, since we bump up the base with the 4.98, I'm saying 4% is still higher than the average we've been giving the schools lately. That might represent level service. It's a plug. They have not given me this analysis. But you can see that if you look in the upper right-hand corner, it's probably not easy to read there, but it's going to result in something like a $2.2 million deficit by FY28, just 4 years away. So if we need to talk about revenue generation and or overrides, this is just one way to look at keeping everything else equal, but giving closer to level service at this level, at this amount, what it would mean for what we'd have to raise in some way, shape, or form to get our either tax levy greater or overrides or whatever. So all of those need to be factored into tax bill impacts for the average taxpayer. And that's done later in the presentation. So move on.
Okay.
Any questions you have, I'm not going to go through everything here, but you've got it. I just want to get a sense of whether you think this, overall this presentation is going to target what we want. And there's 17 slides that could be, as I said, presented at public hearing or even reduced to fewer. So go. Yep.
Hey, Bob, question. So this average increase, is that just a straight linear average, or is that the cumulative average growth rate?
Straight yearly annual percentage bump.
Okay.
Yeah, we had this conversation the last time. You were going to take all of this and create a cumulative one. Anyway, I'm teasing you.
Yeah.
It is literally how our financial model is used. I mean, typically you would only see this for the next fiscal year. So the first easy pass is to just put an annual bump.
Right.
It never will be exactly the same each year. In fact, it's calculated, a couple different ways on this. Sometimes it's what amount of dollars is necessary, and that's you would then calculate what that percent increase was. And if you look in a column to the right there, it shows what the increases were for each of these expense categories from FY19 to FY24. Now that means it includes an estimate or a proposed budget for FY24. So those they can change a little bit if the numbers change for FY24, but it's to give an idea of a running average of what it's been recently. Okay, any question there? You'll see the ovals I put in places to draw attention to certain things, but all of it can be seen in a spreadsheet format and it's in some more detail in the appendix. Okay, next one. So this slide is from 2020, which is FY21. And basically what I want to do is show the top four with the same y-axis of $30 million for expenses for the top four drivers, which are in order: Maynard education expense, not Assabet, just Maynard. Employee benefits, that's number 2. Public safety is number 3, and number 4 is general government. This one you can see if you try to normalize the actual dollars these increases represent, you can see just how much more dollar value is being expensed to the schools than to say Assabet even. Any questions on that? This also slide, I'm going to take it out, when we get this year's information, but and Julie and I are working on that, but what I want to make sure people understand is we did this in FY21, and you're right to ask, well, you guys predicted an override in FY22. Why not? Why didn't it happen? A bunch of reasons. I mean, it is only one, but we funded the schools lower than we were expecting in this, because we were expected to have it rise 4.3%, because that's what they asked for. We didn't give those increases for a host of reasons. Employee benefits rose lower than the average, but that can change every year and sometimes gets very high in a given fiscal year. The ASABIT was erroneously forecasted to go up something like what it went up in FY21 and 20, but that was when they did the reconstruction of the school, and then it flattened out because it, the baseline, became the average. So the increases are more in the 3% range than the 9 or whatever percent we projected. And the final is the new growth from FY22 from Maynard Crossing was an outlier. And everybody knows that you can't count on an outlier. So in this year, instead of $600,000 to $700,000 new growth, we're talking about 250. That's a big number.
Right.
Making up that kind of a difference is our problem, right? It's simple. You can look at these many different ways, but the amount schools want now over what we offered is basically the delta in the new growth between, say, FY22 and what we're getting now. All right, next one.
Kevin had his hand up. Do you have a
Yeah,
question?
go ahead, Kevin.
So this Maynard educational expense, is this inclusive out of district placement, or is out of district placement exclusive? I know ASABIT is separated out, but I'm wondering about like AMSA and the special education outplacements.
No, that's okay. So, it's state aid, right? It's assessments reducing any kind of state aid, right? So that's a separate category. That's a separate. This is what we're giving the schools separate from that.
All right, thank you.
Yep.
Oh, and one other thing, regarding
in the end, it's related in that as the state aid goes, flat or down, and the assessments go up, and they've gone up significantly for, say, charter schools and even outplacement tuition, it's in the revenue line as a decrement. You follow what I'm saying?
Yes.
Yeah, and that means less money to spend on the schools or anything else. Yeah, go ahead.
Sorry to correct. So the charter school and school sending for like going to Acton Public is a reduction of state aid. Out of district tuition for SPED is in that education line.
Oh, yeah, I didn't.
State aid.
Did you ask
So
SPED?
I
thought we were talking about.
I thought that's what he was asking.
I thought about school choice. I was speaking about school choice or charter school.
Yeah.
assessments.
So
Yeah.
charter school. Okay. So I think Pete corrected. And I got the answer I wanted.
Okay, good.
I just also point out that we did have Greg was in here before talking about the employee benefits, and what he said is that he had some sort of deal with the insurance company that this employee benefits rising only 4.6% was most likely a one-off due to COVID.
It rises average 6 to 7% in the last 10 years.
Yeah, and
There've been years it's risen 12%. So I'm not sure about your point.
Oh, I was just pointing out that
It was lower because of COVID.
Yeah.
Because our people weren't going to the doctor as much, and just the numbers were lower. So
as a second,
looking at 4.6 that's more of an outlier. Is the point that we shouldn't bank on that.
Yeah,
that's why I was saying these are the circumstances that allowed us to get through without an override.
Right.
That's the only message, that even though it's very complex, there's more reasons than one. And there's a couple more slides that really show this. So let's go to a couple more. The next one has to be updated to agree with this one only. Instead of ASABIT, we would put in, if you go to the next slide, we would put in general government. So we didn't quite have the exact breakdown in the graphs we had. So Jill, we can talk more tomorrow about, I hope the email I've sent now makes it clear what I'm looking for this discussion, but if not, we'll chat, okay? All right, so go to the next slide, please. So again, this is just for those who haven't read it. It's more, you guys know about what the model is now. It's what Laurie Plord and Mike Guzzo before her put together in the revenue and expense line. It doesn't cover every cost for the town. It doesn't talk about free cash. It doesn't talk about water and sewer fees and enterprise funds and that sort of thing. But for the operating budget, revenue and expenses, it's a very relatively simple set of categories that allows us to see and track trends. If we use new data and trends from the past to project forward, we're order of magnitude close in terms of what we can expect to happen and can plan for years ahead and even decide to this fiscal year for what impacts it might have, like I heard Peter and others talking about relative to, you know, the special town meeting and what happens when we go from the override to asking for a school. You know, what is the impact on people? We can plan ahead and then create a story that's really sensible and believable to everybody and still protects our bond rating and all kinds of other things that we have to worry about. So I think we just need to be more disciplined about it, frankly. Next slide. So A2 scenario is, all I'm really saying here is the big wide oval that you see halfway down is showing the charter school and school choice kind of anchor on our state aid, right? And that state aid is flat or going up 1.4%. It's kind of amazingly poor funding for us as a micro-urban community for schools, for state aid in general and schools in particular, like Chapter 70. The other thing to draw your attention to is if you're Greg, and I wish he was here to see if he would agree, if you're looking ahead and you want to say in the next bunch of years, I want to aim to a balanced budget, that's how you look at the top line, the net, is to say these have to come close to zero for us to be able to be fair and spread whatever pieces of the pie we have over all these categories, okay? So this is revenue, and it relates up the top of, you know, you'll see the next slide, I think, is the first of the expense slides. But really, I'm just drawing your attention. You don't have to read the entire thing to get the, you know, some of the percentages that are typical, some that are outliers. And overall, you use this tool to make sure you can balance your budget. Okay?
So school choice is growing at 17%.
Was 1 year, yeah.
I'm
As
looking
an
at the
average,
average.
as an average, that average is the FY 21 to 24. Sorry, you can't read that, I'm sure. So if you look at, if you were able to zoom this up, and I don't know if you can do that.
I don't know if I
You'd
can.
have to do it on your own personal copy. You
Yeah.
can see that from FY 21 to 24, the average was 17%. Now, the whole point here is, how do you make sure that goes down closer to zero, right? Or negative for that matter, and not send as many people to other districts. So that is, you know, these are major budget drivers we're trying to draw people's attention to if we want to have an impact. Any other question, Kevin?
Yeah, would you qualify that as a, you mentioned that in proximity to this, would you qualify that as a major budget driver?
Well, when I talk about budget driver, I'm talking about expense drivers. This is the revenue slide.
Okay,
It just happens to be that the assessments are in the revenue slide.
all
But
right.
yeah, I would absolutely say it's a huge budget driver. Yeah.
Thank
All
you.
right, next slide. All right, this is just to try to draw attention to the FY 22 bump. 10-year annual increase was about 4.3%, and 5.8 doesn't sound like so much more than it, but it matters a great deal. And we already talked about a little bit before that many things went into that, but this is the total real estate revenue growth, not all revenue, okay? And then the state aid, state information about the same thing. This is from our own analysis, our own financial tool, but if you scroll down, Alana, this is state aid on the left from the cherry sheets. I circled 22 there. It was even lower than usual, which seems odd, right? But a very big bump on the local aid. And we know that a lot of that is Maynard Crossing. And for that matter, even, yeah, so this is all revenue. All right, next slide. So A2, let's see the difference here. Again, if you keep the deficit, this bolded thing in the title, keep the deficit under 650,000, which is the max yearly new growth over the last 10 years, and that was FY22. Well, you have a chance at balancing the budget, right? And but you have to generate more growth than we've been typically doing. So you'll see in a summary that I think one of our biggest challenges is not only to say it's time for an override, it's time for a much, much more concerted effort on all our parts to find new avenues of tax-based growth. That means filling all the empty business shelves and drawing new revenue in. And nobody in town has that charter. So some of the folks that I'm working with as volunteers that we're gonna change the narratives to Maynard's a great place, but also a great place to invest in if you're looking to build a business. But some of that, we've talked about it in this forum in the FinCom quite a bit. I think I've learned, if nothing else, that everybody has the right intention, but it isn't anybody's job to go out and make that happen. And I think that we've got to change that. Otherwise, we'll have overrides every 3 years, which I can just tell you, every time I look at the tax rates of local towns and everything else, I can tell you that we'll soon have people leaving in droves if we can't afford it here. Next slide. All right, this is 8 major budget carriers. This again is sort of giving you an idea of the difference between the growth in expenses between the FY22 for schools, and then this is get it right. Yeah, this is all the expenses, and so it's really maybe redundant, but it is a place where it shows you explicitly that the expense for we gave 5.5% increase in FY22 to the schools and a kind of a high increase to general government, enabled by that growth in revenue. So you can see I'm kind of harping on revenue. Next slide. D2 is slightly different. All right, so this one is using the request that you saw in the school warrant article that goes up 4.9% from 23 to 24 here. And then I think I showed it up above a little bit in the overall slide, but this one's focusing mostly on only expense growth, and shows how much it will go up compared to the A2, which is more like 3% per year. It's only 4% per year, and it still creates quite a bit more of a deficit. In this one, it says 2.2 million by 28. All right, next slide. Again, this is more data just from the DLS, and just basically saying, here's the other was revenue, this is the expenditures, and with and without enterprise and CPA funds included. It basically gives, in some ways, this isn't just us, it's the state gets all this information and compares with other towns. It's a nice place to compare with other towns. Next slide. So here's the slide that, again, is animated to go like one step at a time because it's an awful lot to digest. But you don't see that because we don't have that working. But this is just kind of to state the obvious. Further cuts to town departments. If you look at those graphs that show on a $30 million y-axis, take away increases to all the other departments, I think Peter said earlier, and you still can't make up the deficit that, make up the amount that would represent what the schools need for level service. And they're saying, hey, we can't keep dealing with 3% increases. And that's just a fact for them, right? So that's something we have to grapple with. What are we going to do about that? And, we talked about capital, and we historically, probably not done as much as we should. And now we're trying to reverse that trend. You can see it in the free cash allotments, but we're still not putting in an annual capital line item because we always use it for something else. And again, I guess I would put in the red bullet on the bottom, if level service isn't 4% per year, but it's more like 6% a year, it turns out that's what we really do need, because I've seen those projections in different times over the past 10 years. Then instead of in FY28 looking for 2.2, we're looking for 4.3 million. And that's with no other changes that we probably will have to have. We're not talking about water and sewer bills or anything else. We're just talking about, the deficit in the operating. And so it's not just to give a doomsday scenario, it's just to say, do we believe we can, have overrides to the tune of 4 million and survive and have the tax, bills go up and not lose too many people and the quality of service that we want? I mean, there's going to have to be something beyond overrides to fix that problem, is my opinion. All right, final slide. So again, this is the same one you saw before. I think I added one thing here. I can't remember what it was now, but if there's a chance to have a unified group of stakeholders on the stage, it's to look at this kind of a future and say, what does it mean for what we should be doing in FY24? And can we agree that this is a joint proposal from the stakeholders in town? Because if we can't, it's 99 times worse in both the ATM and the STM to try to get these big projects. Now there's lots and lots of stuff, if you just scroll very quickly for the first few in the next couple appendices, fund balances, I've updated the first two from what I got from Greg. In general,
Yeah, I
the general
asked for the other ones.
Yeah.
I'll give them to you as soon as I get them.
Yeah, and I think what we can start doing year to year is say, well, so 1.7 million is in the general fund. We'll tell people that, but what was it 2 years ago? What does it mean? Right? What's healthy, right? What are the credit rating, folks looking for? And, we should be starting to track the trends of some of these things. Some towns have a budget guideline to say it should be something like, 9% of your budget, right? And ours is going down, the general stabilization. And for good reasons, we moved some there, but are we hitting a place where even you mentioned, Kevin, that we might use general stabilization to do what we need to do? Well, every time we go in there, we risk having a bond rating drop from A to B kind of thing, right?
Yep.
So I just want to point, these are the things we have to be looking at year to year and say, are we really by FY28, are we going to have a huge hole to dig ourselves out or not? Okay. Lastly, one or two more slides. I think we're looking, John Larkin has promised a slight summary there, but this one is, you can go back 10 years from the state, looking at what our average tax bill was, what our average valuations were. And more than that, the next slide I wanted to show, you can start looking at other towns, right? This is state data. And you can say, well, what percentage are their expenses going up? And, what percentage are their tax bills going up? And are we really the worst place for taxes in the state? And the answer is no way, not even close. So let's have some data to kind of, have a counterpoint to the taxes are, I think we've been really, really good stewards of our funding, right? I think, and I've heard Peter say that and others who've been around for a long time, but nobody believes that. And social media thinks that we're just crooks. So we could start, getting a little bit more of this information out there. All right, there's more, but tax relief, there's lots of things for seniors. I think a lot of them are stoic and don't want charity and they don't take advantage of it. But that's one thing we should really look like. What would the cost of the town if we gave people either tax abatements or deferral of taxes for the life of the senior living in their home? There's lots of ways to go about looking at that.
I think you got a couple hands raised.
Yeah, hands going. So go ahead, you pick them, Lana.
I think I saw Natasha's first.
Go ahead.
Yeah, Bob, question for you. This is great. Thank you. I always love when you and Jillian come together and put this ahead of us. The state's data, they have information regarding overrides from different towns, historical data, and I don't know.
Yeah.
If
Scroll
that
down
would
3
be-
slides. We have ours. We have had very few.
Well,
keep
I was
going.
wondering if there was a comparison that we might be able to, because I think Maynard is like it's in 20 years or something, it hasn't had an override or something. Yeah.
You're right. That says
is it-
1991. We voted a number of them down. They weren't all big overrides, but we approved one in 91 that was for 347,000, which at the time was huge, right? Another 3 there you see clustered. So we could start talking about this. I don't have a big analysis or I can't answer a lot of questions about this, But I pulled the data off the state website just for this reason, that I know we're going to be talking about overrides. So what's our history been? So it is there for us to digest. And these are the ones below, I think, are capital overrides or debt exclusions. I forget now.
I just was wondering if it might be helpful, and maybe I'll go play around and look, because I think I had seen it before. Just comparatively, we talk about benchmark communities. I wonder how many of them,
Yeah.
with their historical, what they've done for overrides potentially, and
Yeah.
in the past, in the same snapshot, and what
You mean like Millis or, something on
Littleton, Hudson,
Yeah.
some of those, and
So
what
yeah,
they would have
it's-
done it for, if they had been.
So I'll just tell you that it takes a lot of work. You have to go,
Yep.
the information's there for each town of the whatever number of towns we have. But you have to pull yours and then create a spreadsheet and compare it to the others. And it can be done, which is what I did in the previous slide. But yeah, I mean, I think depending on what you want to get out of it, before I would dive into that and bore people half to death, I'd like to say, what do you want out of the comparison? What do you want to see? That we're not alone? I mean, there's a number of ways to approach it, and I don't want to be biased. You know what I mean?
No, I think it's just helpful context. I always think, because we always look at Maynard and we're, how do we compare with other areas? Are we totally off base? I think it's just more of that. We talk about these benchmark communities, and that's why I just kind of went back to is using them sometimes as a litmus test.
Yeah.
And because it's not an effort that we do overrides very frequently, is that little nugget of education, is it a moment to say, look, these are towns who have already understood and maybe they will have general operating as the reasons for them, that besides debt exclusions, they're more to their operating budget. I wonder if that will help inform the community, that this is a practice that many towns have already understood that there was a need for it. So doing that
I will
effort
say
is
that
not
there's
totally unreasonable.
Yeah, I've heard that there's a desire to have a tri-board meeting in the May to June timeframe. And that's to prepare for what do we do for just the things we've been talking about tonight. And everybody can go to, the DLS website and look at that information, but how do you distill it for comparisons for Maynard? It's a lot of work. So honestly, I think any one of the people on this call could go to that website and say, what information is here? How easy is it to compare? And walk into that tri-board meeting saying, I don't have all the information, but I think this is what we need to present to make a case for an override or new revenue or what. I'd like to see people walking in with solutions that we can challenge each other with, rather than who's got the answer. You know what I mean?
Yeah, I appreciate that. I do.
Yeah.
Thank you.
Yeah. Not just for your ears, for everybody here. I think it's not hard to find the information. It's hard to decide, what does it really mean for us? So, sorry.
Yeah, I think I have two questions. So again, Bob, as always, thank you very much for putting this together. Thank you, Jill, for your part in moving this forward as well. I know that it takes no small amount of work to do this, so thank you. I think I am encouraged to see this, because I think this is kind of discussion that we need to have as a community. One of the questions I have is, there are ways of showing the cost of deferred maintenance for, a certain capital project or a certain capital, a building or something like that. So you sit there and you say, you defer the maintenance so you don't pay it, but if you defer it, you can figure it, X percentage increase in cost for Y number of years. The simple solution, maybe just to use an example, a roof on your house. You can sit there and say, if you don't set aside money to replace the roof on your house, and you put that off, that increases the cost of the roof replacement X amount. at
Plus
some point,
installation that gets wet and gutters that
well,
fail.
exactly
Oh,
right.
yeah,
And
yeah,
at
yeah.
some-
Okay.
At some point, it's not just replacing the roof. It
Yeah.
is replacing the, the underlayment, the insulation. You end up having to do a lot more. So, I think this goes back to a point, made several times this evening, is that deferring this becomes easy, but you end up only putting, on your shoulders or on the shoulders of a future taxpayer, the burden of having to recover, not just to pay a higher price, but in fact, having to pay for something more expensive.
Mhm.
So I'm wondering if there's some way of doing that for service, municipal service. So roads, probably easier. School education, probably a little bit more difficult. I don't know if you have any thoughts about that.
Well, it's a big topic. I would say that for your first thought about buildings and deferred maintenance and all that, I'd say if we're not chartering the capital planning committee with putting those scenarios out to try to say, let's not forget, if you don't do this plan that we have, which I haven't seen yet, I see us still doing free cash at whatever is on that list, which is better than nothing. And I'm impressed by it too, Kevin. They've got a great process, but we don't give them much money to do what's on that list. So we are deferring already. Are we analyzing what the cost will be in the future? I'm certainly not, but we could task them with that. And, Greg could do that. What you're really saying is if you use that analogy for other things, I think doing just these simple 8 categories and projecting forward begins to get you there already, but we don't do it in a disciplined way, haven't been doing it in a disciplined way. So I think that if we get to this point in the budget process and Natasha is coming to us and saying, and Mary and others saying, we're begging because we have no choice and we've told you guys we need more. The question is, does everybody really get it? Do we say our vision for the future is we are going to try to do level service for our schools, and what the cost is this. And if you defer that cost, what you're choosing is ever increasing school choice outplacements and charter schools and all that kind of thing. So it doesn't take a whole lot to look at it in this kind of detail, but do it in January when you first get the TA budget, and in February have the group there grapple with those issues, either as from a budget subcommittee perhaps that has representatives for all the 3 boards, and presenting challenges to the group well before what's now April. And you guys are so busy doing recommendations, we don't really have time to dig in deeply on this.
Right.
And now we're going to do it in May and June, right? With the tri-board meeting. I think that's great. We could have done it in February,
Right.
I would argue. And it would be much more impactful if we did.
Well,
That's
I
my
think
vote.
we need to do it in February. I think we need to continue that discussion at a public hearing just prior to annual town meeting. And I think we need to do a small briefer presentation at town meeting itself. And of course, we've talked about doing that. My second point, I guess this is for the larger finance committee, which is around the topic of overrides. So I do think we ought to take a look at towns that use overrides on a regular basis. Some towns have the capability of using development to fund expenses, but Maynard does not. I mean, we had one big project that took us years and years to put into place down at Maynard Crossing. We have another one that we're talking about along Powder Mill Road. These are really singular projects, which probably are not going to, move the needle over the long term. And the reality is that we're like some towns in that we don't have the growth potential. And so therefore, I think just understanding that, to Kevin's point a little earlier, you can't sit there and continue to expect revenues to only grow 2.5% when inflation is 3 times that or 2 times that. Eventually, at some point, you're going to have to grow revenues. And if you can't do that through new growth, then you're going to end up having to do that through overrides.
Agreed. I guess I would still argue that we haven't done all that we could be doing to grow revenue. I really do believe that.
Oh,
And I'm not naive that it could happen and everything would be changed in a year or even 3. But it has to be more of a priority for the town and for volunteers that work with the town and all that than it is today.
Well, and for townspeople to understand that, you can't look. I mean, I remember when I was on planning board and we were doing the site plan review for Maynard Cross, actually the predecessor in Maynard Crossing. And somebody said, well, I just think they ought to turn it into community gardens. I'm like, 58 acres of community gardens. I mean, I'm not thinking that's bringing a whole lot of tax revenue in.
I heard the same thing about the old fire station. Let's make it a park. I'm like, dear God in heaven. I mean, we obviously are not doing the job we could be doing of communicating and educating the public, but just how far behind we are the 8 ball in terms of having enough revenue.
Absolutely.
Anyway, and so little things matter. Having these conversations and beginning to get the 10% of the people or less that come to town meeting actually start to talk to their neighbors about it is a great little town, but God damn it, we've got to have denser housing. We've got to be attracting other businesses. And what is my role in that? Is it to go on and bitch about something on social media or roll up my sleeves and try to figure out how do we attract more revenue? Anyway,
bitch about it on social media.
Yeah, that's what your solution is. Yeah,
Right.
yeah. That's certainly been. It's certainly an awful lot of people's choice. All right, it's late.
Yeah. What else would you want to hit on here?
I tell you, you're going to be doing recommendations next week, but I'm not leaving on the 20th like I thought. So
Great.
what I'd really love is that if you all read through it and give blunt and candid feedback about what you like and what you think is just too wordy, too obtuse, whatever it may be, but make it yours. I mean, I really have done this as a draft for the FinCom to own and to start to use as a communication tool. But most importantly, that and the spreadsheets that created a lot of the data, I think are the foundation of what FinCom needs to do, and we in general need to communicate among the boards to have a more informed stakeholder, decision-making body, and then the same for voters. It has to happen in that order, I would argue. So feedback by next week or even the week after, but I mean, you're going to have the public hearing by when? It has to be 2 weeks before the 15th?
It'll be the 8th.
Yeah.
It's just the week before 8
Right.
p.m.
So it turns out you look at that, it might sound like a lot, but it's very little time because
No, I know. It's very little time.
First time I heard about the 250,000 reduction of new growth from 300 to 250 was tonight. And I just baked it in the 300,000 to my spreadsheet. Now I'm going to go change it and then do new graphs
Yeah.
So please give me feedback as soon as you can on any of this.
That sounds great. Thank you so much, Bob. Really.
You're entirely
Much
welcome.
appreciated.
My pleasure.
Really, really helpful. And we all appreciate it. And thank you for being here and staying so late.
Yeah, my pleasure. All right. Keep up the great work, everybody. Don't give up.
Thank you. All right.
Oh,
Very quickly, we'll just move on to some routine items. So again, take a look at that. Send your thoughts, and hopefully we'll get a good presentation going. And let me pull up our minutes from March 27th.
I just have to say, I have never done them in a 1 week time span.
I know, yeah. Sorry, you got to do it again this week, and then we'll be back to normal. So here are the minutes from March 27th, discussing with Assabet Valley and Justin, community preservation, some on Green Meadow. It's another good long meeting. So I will entertain a motion unless anyone has thoughts or corrections.
I make a motion, we accept the minutes from March 27th.
I second.
All right, then we'll do a roll call vote. Khadijah,
Yes,
Kevin,
Yes.
Ken,
Yep,
Katie,
Yes.
Peter,
Yes.
and I'm a yes as well. Thank you so much for those, Katie.
You're welcome.
All right.
I'm going to take my leave. Good night, everybody.
Thank you, Bob. Thank you
Yep,
so
bye.
much.
You bet. Bye-bye.
I am gonna kind of I don't think I have much for chair updates at the moment. So does anyone have a member updates for this evening? Okay. So we are gonna meet again next Monday, same time, same channel, and we will go through at that point the voting for the recommendations and the comments for the recommendations. For those of you that are maybe writing comments for recommendations that are uncertain, you know, which way the committee may be voting, that can be challenging and a little tricky. You can potentially, if you'd like to, think about what you would write for either scenario, or you can just hold off and we can, you know, work through it after we have the vote. But for those that are doing the more routine ones and the ones that are, you know, we've talked about and it seems pretty obvious which way we all feel about it, please go ahead and try to draft those up and we'll work on them next week.
Alana, do you want us to send those to you prior to the meeting on the 10th?
Yeah, if you can, that would be great.
Okay.
I'll just compile them all into one document we can sort of go through of the meeting.
Okay.
All right, if there is nothing else, then I will entertain a motion to adjourn.
make a motion, we adjourn.
I second.
Okay. All those in favor, we will give a wave. Thank you all so much. Have a good night. Thank you for the long
Thank-
meeting and we will
Thank
see you next
you.
week.
Night all.
Good night.
Good night,
Good
all.
night.